Oh, yeah, we live, baby. What's up, everybody? Good morning. And what day is it? My day is all throughout. Is it Thursday? Oh, yeah, it's Money Thursday. Ladies and gentlemen, again, what's up, everybody? Welcome back and good morning. And make sure you hit me with a big old good morning inside the chat. I want to see who is inside the chat right now, who is ready to rock and roll, and who is ready to have an amazing day in the market, because you know me, I am always ready to have an amazing day. So, what's up, everybody? Chris, Andy, Chelsea, Don, Corey, Tom, everybody else inside the chat. Again, good morning. Happy Money Thursday. We're going to dive right into it. We're going to discuss what we got going on for today and take this time to really get you guys prepared, set those expectations, make sure we have our plans set for today so we can absolutely crush it and really just have a strong and profitable day, guys. All right, so before we do dive into it, there's not really a lot to discuss today. The SPY, pretty challenging as far as doing, daily TA. Today was a bit of a challenge just the last few days. It's been really just tight, choppy, not a lot of really identifiable key zones. So if you were like, hey, I was trying to chart up the SPY and it was tough. Hey, today was one of the more challenging days. Qs, not as challenging, a little bit easier. I like the Qs a little bit more than the SPY, and I'll explain why. But other than that, we'll discuss NVIDIA and then Rivian. That's all we have today. Out of the 70, 80 stocks that I reviewed, nothing looks phenomenal for today's session. So we'll talk about the SPY and the Qs. I really don't like the SPY, but I do like where the Qs are at. We'll discuss that. Maybe some opportunity to the short side today with NVIDIA, and also maybe some opportunity to the short side today with Rivian. So with that being said, we will have a lot of time to review your stocks for today. Go ahead and get those posted inside of the Market Mastery room, and I'll be sure to look at those, review those, and again, make sure you guys are prepared with those stocks for today that are going to be on your watch list. All right, so let's dive right into it. Economic calendar, we know we had two or three key pieces of data that was being released this morning. We had durable goods data at 8:30. We had our final GDP number come in, and then we had initial jobless claims. GDP came in line with the forecast. Initial jobless claims came in a little bit lower than the forecast. So we had 233,000 compared to the 236,000. And then I don't really look at durable goods, nor do I really know what durable goods data is. I just know it's of high importance, and we see the market react. So maybe at some point, someone else can maybe jump on and explain durable goods and how that's something important that impacts the market. Because I'll be honest with you, I don't know. I just know it's high important data, and I want to be mindful of it. But we had jobless claims come out better than forecast, and then we had GDP data come in line with the forecast. And that's why I saw a slight little pop here. Nothing too crazy, right? You had QQQ at 8:30, hit a low at 479.50. You got a nice little 70-ish cent pop. Again, nothing too crazy. We didn't see a big reaction because of that data. And then the SPY was kind of neutral as well. You saw about a 40, 50 cent pop off all of that 8:30 data. So that's out of the way. And then coming on up today, we are pretty much in the clear. The only thing that we have is at 10 a.m., we have pending home sales data month over month. and year over year. But other than that, there is nothing else going on today. So we are in the clear. But be mindful, tomorrow at 8:30, we do have core PCE data, and that is the Fed's preferred inflation gauge. And so that is some key data that the market would absolutely react to. So if you're thinking about getting into a trade and maybe turning that day trade to a swing trade because you see the opportunity, right? Okay, great. But just be mindful, you do have key economic data being released tomorrow at 8:30, and that's just something to be mindful of if you have any swing trades or if you're thinking about carrying a swing trade from today into tomorrow. All right, you got core PCE tomorrow at 8:30, Chicago PMI, and Michigan consumer sentiment data. So tomorrow should be a good day. Got a lot of key data, and that should bring in some volatility to the market. But for today, again, we are pretty much in the clear. So let's go right to the SPY. Let's talk about what we got going on for today, and I'll explain how I don't like the SPY for today. I just don't really see a lot of opportunity, guys. I really don't. And so today is going to be a day of patience, letting the market develop, letting the market move, and really go from there. I don't really see any like high probability, game plans to have created and built for market open just based on what I see on the daily, how we've been moving the past, couple of days, and where we're currently sitting. Again, I just don't see a lot that stands out to me. So I'll give you guys the 3 key zones that I have for today, and then 1 key level to keep on watch as well. All right, so let's dive into it, and I'll actually show you these zones on the daily. Sometimes that really helps you guys bridge the gap. If I show you the zones on a 5-minute, you're like, okay, great, I got the zone, but I want to see that zone when you're discussing it on the daily. So first zone that we have here is going to be 545.52 to 545.66, and it's a light significant level. It's definitely not a substantial level by any means. But it's a light level to keep on watch, more or less just as a reference point, right? Yesterday's close, then up against last Friday's high a day. So it's a zone that really only has 2 touch points. But the main reason I'm going to reference it today is because, again, the lower end of that zone is up against yesterday's close. And if we see the SPY say gap up today, where could we pull back to? Yesterday's close before finding some support and then maybe, pushing on up today. Right? So that's why I'm going to look at that zone here. That's between 545.52 to 545.66, just as like a reference point. I'm not really inclined to be looking to take any kind of trades off that zone because it's not a real significant zone. All right, so we got that. Next zone to the upside is a key zone. That's up between 546.96 to 547.15. Right? Then we have this lower zone of support that's all the way down between 542.74 to 543.04 here on the SPY. Right? So you got those 3 zones that we will be watching today. Last thing that I want you guys to do is take a fib extension on the daily from this swing high down into this swing low and actually see that yesterday's high a day was actually right up against that 50% extension here on the SPY. And so we came up yesterday to that 50% threshold, and we did see a nice little rejection towards the end of the day off that 50%. So that's going to be another key level that I want to watch for today. Like if the SPY does come back up into, say, yesterday's high a day, into that daily 50% extension level, and we see a lot of resistance, and we're just having a hard time getting above that 546.32 region, which is that 50% level, I would expect that we could maybe start to roll on over and maybe see a little bit more downside, right? It is very possible that this is leg number 1. This could be that lower high on the daily off that 50% level that leads to seeing the second leg to the downside, right? Maybe not setting up today or tomorrow, but maybe coming into early next week if we do see good price development and good price action off that daily 50% fib. It's very, very possible that that is going to be the barrier of resistance that allows the SPY to develop and form that daily lower high, and we could see the second leg to the downside. So that's where my head is. That's what I'm looking at for today and tomorrow, just to see what is the SPY going to do right around that 546.32. Do we come up today, hit it, get rejected, and do the same thing tomorrow and see that we're topping out? That's what we start to see. We may have a short-term swing trade to the short side coming on up. So keep that in the back of your mind. But those are the three most important zones to watch today. And I will be referencing that 546.32 level because it is up against that daily 50% retracement. Okay. Now, that being said, when the SPY opens, I'm just in observation mode. All right. I don't have any key levels or anything where I feel confident to build any what if plans. And I just don't see a whole lot here on the SPY. So I'm going to let the SPY open, let it kind of get a sense of direction, let it move a little bit, and really just go from there and continue my analysis to build some conviction, to get confident, to see if there are any opportunities. Okay. But I want to be super patient today, be hands off with the SPY because I really don't like what I see right now at this point in time. Okay. Moving on to the Qs. I like the Qs a little bit better. Okay. So here on the daily, we've got a couple key zones to keep on watch. Okay. We still have that daily fair value gap that I want to look at today. You know, if for any reason we get up into that daily fair value gap between 482.56 to 483.42, we could see an opportunity to get short today inside of that daily fair value gap. So that's going to be another area that I want to watch for today as well. And then we do have this lower zone of support down here between 473.82 to 474.17. And then the last thing I want to do is just go ahead and mark up a nice tight zone off yesterday's close and yesterday's high a day. Okay. So we have yesterday's close and yesterday's high a day, that small little zone, just as a reference for today to see what we do off that level, if anything. That's between 480.39 to 480.96. Then we have this daily fair value gap. That's between 482.56 to 483.42. And then we have this key main level of daily support that'll be all the way back down between that 473.82 to 474.17. Okay. We're also going to take a fib extension from the swing high to the swing low here on QQQ. And what did we notice yesterday? Just like the SPY, we came up into that 50% level and we saw it get rejected. I mean, look at the Qs. We came up to that 50% extension level several times yesterday and hit that level as key resistance. So I want to watch that 50% level today as a barrier of key resistance. That's 480.39. And I also have that slight tight zone off yesterday's close and high a day as a potential level of resistance here for today's session as well. Right. So that being said, we see some similarities with the SPY and the Qs. Now the SPY, when I look at it, I analyze it, I can't really take a lot from it. It doesn't look clean, right? I don't really get that confidence conviction I'm looking for. When I look at the Qs, I get a little bit more confidence and a little bit more conviction, and there are some similarities, right? The SPY pushing back up to that 50% level could be where we see that daily lower high form before seeing the next leg down. And there is this big daily gap that we could fill at some time, right? Same thing with the Qs, right? What did we see? We came up to that 50% level yesterday and we hit it several times and we stayed below it as our main barrier of resistance, right? If we open today, push up into that 50% level and we fail to break above yesterday's close and yesterday's high a day, and we see the Qs topping out at both of those levels, that would start to indicate a nice short opportunity. And just like the SPY, this could be where we start to see that lower high form on the daily before we see that next leg down. Where could the next leg down put us here on QQQ over the next week or so? Into this big daily gap, in the lower end of that daily gap is at 468.19 here on QQQ, right? And I don't know if you guys do any kind of like measured moves. I'm not a big fan of doing measured moves, but it's always nice to do that to see if there's any like confluence. So just hypothetically speaking, if we do see, right, we had that first leg down. I took a trend line from that high to that low, right? So I'm measuring this first leg down, okay? And assuming that this is where we see that daily lower high and we start to see the market rolling over, we're pulling back, we start to see, hey, there's potential to get the second leg down. Where do we think the Qs could get to? Right, maybe come down to fill that gap at 468.19. And if you take a measured move from this first leg and you start that measured move here where that potential lower high could be, where does that measured move put you to the penny? Right to the bottom of that lower gap. So I don't really do measured moves all that much, but it's nice to see when it lines up, and it does. Here's your first leg. measure the move. If this is the lower high before this second leg starts and you measure that move on down, it's pretty surprising that it just so happens to put you at the bottom end of the gap. So it is realistic that this 50% level is going to be a key level of resistance here for QQQ. And if we fail to break above it, and if we fail to get above yesterday's close and high day, and this is the area that we start to see that daily lower high form, I'm going to be very, very interested in looking to get short, not just for a day trade, but maybe for a short-term swing trade to see if QQQ gets that second leg to the downside over the next week or so and see if it does come down and fill that daily gap at 468.19. Okay, so that right there is why I like the Qs a lot more. When I look at the Qs, it's clear, right? I build more confidence and conviction with what I see compared to the SPY. And I see some potential opportunity here on the Qs right at market open. And so here's going to be the game plan on the Qs from market open. If we open below all of this resistance, okay, and we push up into it, and we fail to get above it, and we see the same kind of price action off all of that resistance, like we saw yesterday, this is an area where I'm looking to get short here on QQQ, expecting we start to see that next leg down, okay? Where is the main target to the downside on the Qs? Well, your first main target to the downside is going to be down between 473.82 to 474.17. That's going to be your main PT. But there are going to be other areas where you should look to scale out and lock in some profits, right? There are going to be some pit stops along the way down. And there are going to be areas that you should look to scale out and have some profit targets to the downside. So for example, number one, yesterday's low of day. So first PT to the downside today would be up against yesterday's low of day at 478.13. Then down into this pullback low from Tuesday at 476.27. Then all the way down into Tuesday's low of day at 475.15. Then we can expect to see it all the way down at that lower zone of daily support. So that is going to be my game plan for today on the Qs. And that is my short plan. Okay. Now, what do I want to do to remove my bias, right? I want to look at the long side of the trade and have a plan in place just in case we see the long setting up versus the short. We know what the short is. We failed to get through that 50% retracement level on the daily. We failed to get above yesterday's high day and close. This little zone of resistance, this is where I look to get short today. But if we are able to break through all this resistance, right, pull back and hold above that as support, and we stay above that 50% level as well, I would be looking to get long, expecting that we would probably see a little bit more upside on the Qs here for today. And where would I expect to see the Qs get to? Probably up into that daily fair value gap between 482.56 to 483.42. Right? So it really just comes down to what are the Qs going to do off that 50% level at 480.39, and then what are we going to do and what are we going to see off of that zone of resistance? It's pretty simple. We're staying below it, trading below it, we look to get short. We break above it, pull back into it, hold it as support. We simply look to get long. We just want to see an opportunity present itself off that region, off that zone. Okay, so all of my focus, not most of my focus, all of my focus at the start of the day going here on QQQ. I will continue to analyze the SPY, see if we have any opportunities setting up at some point today. But at 9:30, I'm putting all of my focus here on the Qs because we could see a nice opportunity presenting itself right here at 9:30, right? So you guys should be all set, ready to rock and roll there. NVIDIA, okay, I'm going to keep it simple. I'm going to give you a key zone, and that's going to be a key zone of resistance for today. That's going to be a make or break for NVIDIA. And if we cannot break through this key daily zone of resistance, I will be looking to get short here on NVIDIA. So that key zone of resistance that I have is between 126.14 to 126.52. NVIDIA is going to be opening underneath that zone. So if we see NVIDIA open under the zone, we push up into that zone at market open and we get rejected and fail to break above it, I'm looking to get short on NVIDIA, expecting to see some downside here today. First target to the downside, up against these lows from yesterday, 122.86. Next target to the downside, up against the low of day from Tuesday at 119.39. And then your third target is going to be these lows from Monday session at 118.28. All right, so main target, 118.28, right? Another target to the downside, right at 119.39. And your first target to the downside will be up against all of those lows from yesterday at 122.86 there on NVIDIA. And it all comes down to this key zone of resistance between 126.14 and 126.52. We know what we want to see. A move into that zone, see it get rejected, and present that opportunity to get short. And we simply get short because we're expecting to see a little bit of downside today, and we simply put our stop losses just right above that level of resistance. So be nice, tight stops, really nice reward. I like the opportunity that we see here with NVIDIA. So let's definitely keep this one on watch for today, as I do think we could see some downside. All right, and then lastly, we got Rivian, RIVN. Massive daily gap here from Tuesday into yesterday. So go ahead and mark up Tuesday's high of day, and then mark up yesterday's low of day, right? And then shade that with a rectangle, right? That is a big old daily gap there on Rivian, RIVN. Top end of the gap, 14.18. Bottom end of the gap, 12.07. So what I'm looking for today is to see if Rivian can get below that 14.18 level. Stay below it, and then drop down to the lower end of the gap to fill that gap today at 12.07. That's about 2 points of potential downside on this really cheap stock, right? This is a great opportunity in my opinion. Even if you don't like trading these penny stocks, I see the opportunity here on RIVN, and there's decent risk reward, which makes this, you know, at least worth watching for today. So we have the game plan on RIVN. I want to see it getting below that 14.18. Are we falling below that level here in pre-market? We are. If we open inside of this gap, I want to see Rivian push up to the top end of this gap at 14.18 and just see it get rejected. If that's what we see take place, I'm looking to get short right off the top end of that gap, and I'm going to short this down to the lower end of this daily gap at 12.07. That would give me about $2 of potential reward to the downside, and I can safely put my stops on this trade, probably 30 cents, right, to the upside. So I like the risk reward here. Risk reward is phenomenal. Potentially 2 points of downside, and we could safely get away with, say, like 30 cents of risk, putting stops just right above the top end of this gap, which is going to be a key level of resistance. We stay below that 14.18, we could expect to see RIVN flush and possibly drop on off down to that 12.07 and fill that daily gap today. So I definitely want to be watching RIVN as well. We'll definitely check out those options, see what they look like, and see if this is an opportunity worth getting some puts on. If not, I will happily short shares of RIVN. Just really depends on what those options look like. But definitely want to keep this one on watch today for a possible gap fill to the short side, down to that 12.07. And that's what I got for you guys today, right? Watching Rivian to the short side, watching NVIDIA to the short side, and potentially QQQ to the short side off all of this resistance as well. All right, those are my three main watches for today: the Qs, NVIDIA, and Rivian. All right, so Market Mastery, we don't have anything typed up, so you guys don't have anything on the watch for today, it looks like, or anything you want to have reviewed. That's okay. If you guys do have anything, open the mics, let me know. We can definitely review it. We got about 7 minutes until the market opens on up. Oh, and then shop for a swing trade. Right, I really like shop for the possible swing trade. It looks super bullish in my opinion. I've just been waiting for a little bit more confirmation to feel confident to get in, because I'm like yesterday, like, where do I get into this, right? I'm waiting for a little bit more development so I can identify better areas for entries and have a better game plan so I can get in on this trade. I think today could be the day. So if shop is able to get above this little zone of resistance between 65.43 to 65.53, so if we can see intraday shop getting above that level, right? And holding above that level, I would be interested in getting long on Shop, putting stops below that level of support. And that would be a great ideal area for me to get in for a short-term swing trade. Now, this is a day trade opportunity that has a lot of great potential to turn into a swing trade, right? My target on Shop is up around 68 to 68.16, right? So if I can see Shop breaking that daily zone of resistance, holding it as intraday support right at this 65.43 to 65.53, I would be interested in getting long with a main target up around 68 bucks. Could that be hit today? It could. We could see a $2.50 move today, right? We could take all of that off the table for a great day trade, but it's also potentially going to bleed into a few extra days, maybe a few extra weeks. And that's why I think we should be focused on getting positioned correctly to where if we do take this trade, if we are able to secure some profits and scale out, at least we're positioned correctly to where, hey, if it looks good towards the end of the day and we think there could be more continuation to the upside for a short-term swing trade, at least we're positioned correctly to hold some of that position for that swing trade. So that's kind of where I want your guys' head to be on Shop. Don't trade tomorrow's expirations. Don't trade next Friday expirations if you think this could turn into a nice short-term swing trade. Start thinking 30, 45 days out. Buy yourself some time. When I look at Shopify, my knee-jerk reaction is this thing looks bullish, right? And so again, my first target up around 68 to 68.16, which is near the 200 SMA as well. That's my first main target here on Shop. But again, I want to be positioned correctly and buy myself enough time because this could be the start of the second leg to the upside. Here's your first leg on up. Here's your first pullback. If we start to see this push off this daily high or low, we can start to see leg number 2. And going back to the whole measured move, if we measure this move from swing low to swing high, and then we take that same measured move from this pullback low, where could that second leg put us? Up here at 75.20. What's at 75.20? It's technically the top end of this daily gap. There's the low of day prior to the gap down. Technically, this is the top end of that gap at 75.28. And surprisingly enough, when we measure the move off this first leg, we take that measured move and put it up against this pullback low. Where does that measured move put us? At the top end of the gap. So I like it. I think there could be even more upside through that $68 region, through that 200 SMA. In the coming weeks, it's very realistic. We see Shopify up around 75 bucks. So I want to stress it. Get positioned correctly just in case this exceeds your expectations and continues to push to the upside. I like Shop, want to keep it on watch. I think it could be setting up today, and I definitely want to start getting positioned here on the short-term swing trade here on Shopify. All right, so that's what I got for you today, guys. Got 2 minutes to market open. Let's get all set, ready to rock and roll, guys. QQQ, number one watch at the start of the day. Tom, what's up, man? Good morning.
Good morning. Just for information purposes, tomorrow's a big economic data number for the Fed. PCE is released.
Yeah, PCE tomorrow at 8:30, and that is definitely the Fed's preferred inflation gauge. So that's going to be key data.
And that may have an impact on the way the market trades today, too.
100%. Absolutely. So I want to stress that again. If you guys are thinking about, oh, I want to swing trade the Qs today or swing trade the SPY short, long, regardless, just be mindful that you're going to be holding a swing trade through some really key data. And you just have to go ahead and factor that additional risk in to a potential swing trade if you're going to take a swing trade or if you're in a swing trade, right? And you're not going to close it out. You're like, oh, crap, there's PCE data. Just be mindful of that and make sure you understand that extra risk by holding through data when you don't even know how the market's going to react. And you still got to wait another hour after data to be able to close that position because you can't do anything in pre-market. So just be mindful of that if you guys are looking for a swing trade or if you guys have any swing trades open and on the table. All right.
I have a dumb question.
No such thing. What's up?
Okay, so on that one, what you just stated, let's say you do have a swing trade and you already had a hard stop on profit and loss,
Okay.
and boom, okay, it's during pre-market, bad news come out, it drops down. Would it still cut you out at your stop loss while it was pre-market,
It
post-market,
will
or
not.
not?
Stop losses do not work in pre-market or post-market, so only during the day.
Okay. Just wanted to make sure on that one.
Oh, you're good,
And I know
man.
you said SPY and Qs, if you have swing trades on those, that counts on any other trade as well, correct? Where it could
I
impact it,
mean, like
or just
Shopify,
SPYs and
no.
Qs?
Shopify's going to do its own thing, for example. Like, if the market dumps hard, could you see some sympathy movement with Shopify, for example? Yes. But are you going to see that type of sympathy movement with Shopify compared to, like, NVIDIA if the overall market dumps? No. Like, you'll see more sympathy movement with, like, NVIDIA if the market dumps compared to something like Shopify. So I'm not too concerned about my swing trade on Shopify holding through key data. Right? But if
Okay.
it was something like NVIDIA or the SPY, the Qs, or Apple, of course. Because if the SPY and the Qs dump, what's going to happen with Apple and NVIDIA and some of these Mag 7, right? These large caps, they're going to correlate and get some sympathy movement to the downside. We see it all the time. But I'm not too concerned when it would come to something like, Shopify, for example.
I don't want you missing out on the Qs if you got it. So
I'm
I'll
watching
let
it.
you
No,
go.
I'm not going to miss anything. We're good, man. I'm watching to see what we do here. But next step is getting your hedge pressure levels for today, ladies and gentlemen. All right, let's go QQQ first today. See where we're at. A 481 weekly hedge would be ideal. But it looks like we're down at 479.50. I don't know if that was the same area as yesterday. But today you got a 479.50 on the Qs. We'll go back and double check that to make sure that's accurate.
Yesterday was 477.50 weekly on the Qs.
Okay, so we're good. Yeah, 479.50 is your weekly. We're above monthly as well. I don't know if you want monthly. It's all the way down at like 460. I don't throw monthlies when they're so far away. SPY, we got a 546 weekly hedge. 546 weekly hedge for today. If you guys want monthly, it's down at 540. I will go back and get QQQ hedge for monthly, 470. I'm going to grab NVIDIA's too, just to see where that's at. You got a 125 monthly on NVIDIA. And you got a 127 weekly here on NVIDIA. It looks like Shop may be setting up a little bit for us. Go look at some Shopify calls and see what those are looking like. I mean, at this point, stops would be under low of day. Entries would be a retest off that daily zone. And we already know where our main target's going to be. Man, you got an 8-to-1 risk reward here. Looking to go, again, 30 to 45 days out. Let's go start with the July 26th. Those are 29 days out. We'll start there. Kind of get an idea of what these are looking like. Spreads are horrendous. Horrendous. Let's see if those tighten up a little bit. Going 36 days out. Spreads are terrible, man. Those are really bad.
Yeah, it just has to settle with the market. I've got some options I'm in, and the spreads are like $1. It's ridiculous.
Oh, on Shopify?
No, just on some of the other things I'm sitting
Oh,
in,
gotcha.
like Electronic Arts, which I'm out till September on. That spread is 60 cents.
That's huge.
Yeah, so things have to settle. So Trucker Ed is listening. That was a nice trade you had on RMD.
Yeah, very nice. That little gap fill
Oh,
bounce there,
thank you.
buddy. Good
I was
stuff.
waiting.
Yeah,
I
I
was looking
did
at
jump
it
on it,
today.
and I'm still gonna hold it till 198, 199. But that's why I asked that question right now. Like, okay, fine. If those news come out, would it impact uh other trades or mainly SPY and QQQs? So let's see what happens. I'm gonna
Yeah,
hold it.
man. Yeah, I don't get too concerned if I'm like swing trading Rivian or Coin or Uber, something like that, Spotify. Like, if we got key data, that's fine. I'm going to hold my trades through it. Those stocks are still going to do their own thing. Unless the market really starts to tank, then you'll start to see some sympathy movement with those. But the first ones that see the sympathy movement that you got to be concerned of are going to be like your large cap top holdings with the SPY and the Qs. So that's going to be like Microsoft, AMD, Apple, Tesla, Nvidia. Stuff like that. If you're in those types of swing trades through key economic data, oh, for sure. That's something to be mindful of, in my opinion.
Okay. No, yeah. I know I spoke with Tom yesterday, and I said, hey, I don't know if you see this one, but it cracked. They retested again in that zone, and I'm gonna take it on the paper account. So
Get it.
let's see what happens.
Good stuff, man.
Yeah, I just wanted to see how it opened today in terms of the movement and price action on it. I like the idea. The idea was certainly there. I just wanted to see a little bit more development. But yeah, that was a good entry for you. Boy, Shopify just ripped.
I know. I mean, I was like, dude, it looks so bullish. And I was really wanting to take that trade, but the spread sucked. So
They still suck.
they
I
still
mean, I'm
suck.
looking out even 30 days, just even on the 65s, and there's a spread of almost 50. It's a spread of 50 cents.
Yeah, it's just like how you can't touch those. Just can't.
Oh, can't be down, if you buy 10, down $500 on the initial trade.
Right. Unless you're that convicted and confident where you're willing to spend, $600-700 just to take a trade. Every now and then it works.
Sometimes I just don't like. I mean, if you're talking on something that's priced under $1, maybe that's just too big of a spread.
That was me on GME. My cost to short that was ridiculous.
Oh, that was crazy.
Yeah.
I mean, here's the spreads on the Shopify again. The 65s have now gone to $1.30.
The spread. Oh yeah, that's crazy. Is it still? I'm
Two
sure it's
seventy
still
eight,
ripping.
278 to $4.
So Nvidia's sitting at that key zone, high watch. You got the Qs getting inside of that daily fair value gap. Should be on high watch as well. Want to see what Nvidia does here off that key zone and see if there's a opportunity to get short. I mean, first target would have to be monthly hedge of 125. We get below that, then those other targets we talked about this morning would be super valid. So I definitely want to keep Nvidia on watch. Shopify just straight to the upside. And Rivian got pretty close to the top end of that gap, but not quite to it. Right now, it's going to be Nvidia and the Qs. And just like that, you already got Nvidia dropping on off. Nothing just yet. Still being patient. Is Shop just going to hit 68 today? I mean, at this pace, probably. That thing looks super strong. I'd like to see a nice little pullback to be able to get in on this.
I like that Q's analysis. The timing was interesting because I was looking at a reason for a 5% pullback on off the all-time high on the triple Qs.
Yeah.
So really, even off the latest pullback from back in the March area, I think it's gone really far. And it just would be healthy for that kind of a pullback. It's not quite a 5% on the different levels with the two different levels you gave this morning, but it's pretty darn close.
You got almost a 4% into the gap fill. Yeah.
Yeah.
And then 5% back down into this previous demand zone. So, I mean, realistically, yeah. I mean, 3 to 5% pullback would make sense. You do that measured move, it puts you right there as well. But today we'd have to close back below 480.39. So if we close above that level, I don't like it. If we have a strong upper shadow rejection today and we see this closing back below that 480.39, oh, that's starting to look good for some downside.
And the Shopify options have tightened up.
Have they? We just got to get a pullback now.
Yeah, 66 or basically 10 cents.
Yeah, Shopify can pull back a little bit for us, which I would expect. A little bit of a pullback. Great, let's take it. But it already set up. Break, it held, and then just boom, straight to the upside. NVIDIA was a great short too. Came in that level, tap, strong rejection. Man, today's a day of missed opportunity. Missing the opportunity on Shop, missing it on NVIDIA. Let's see what the Qs give us here. We came inside of that daily fair value gap. We got a nice rejection right off the bottom end of that fair value gap. I do like that price action. What was that, Tom?
I wouldn't even say missed opportunity on Shopify. It's just you just can't realistically take it with those spreads.
Oh, yeah, with the spreads. Yeah. I kind of feel like I missed it because I was actually going to jump in yesterday towards the end of the day. But I'm like, I just want a little bit more because technically we can gap down and I get a better entry. But at the same time, it looks super bullish. That's what I was saying yesterday. I was like, I can't justify a solid logical area to get in. I'm like, I'm going to wait until tomorrow. And then boom. A little too patient on that one.
Hey Josh, can you explain to me again zones for QQQ? I got lost and I don't think I understood them really well.
Absolutely. So first things first is today was more of a challenging day to find our key zones. It's not as clean on that daily chart. It's not as clear to just find these key zones that really stand out. So, the last couple of days been a bit of a challenge, but we can still find some zones. So we still have that one area that we discussed yesterday, this little yellow box here. That's a fair value gap. Okay, that's not a key zone of support or resistance. We call this a fair value gap. That's between 482.56 to 483.42. And it's respected as an area of resistance, but it's not a significant level of resistance, but that's how they're respected. So that was the first area that I wanted to watch. The only other zone that I see here is between 480.39 to 480.96, simply off yesterday's close and yesterday's high a day, right? Because when I look at this region here and I'm trying to find zones with multiple touch points, very hard, very challenging, kind of messy the past 2 weeks. So when it's a little bit messier like this, what I do is I just start with the previous day's levels. And those are my reference points. So today, bit of a challenge. I can't find those zones. I'm just going to reference yesterday's close and high a day as a potential zone for today.
Okay. So you go by how it closed.
Yeah. So for example, I'm just, I can't really see any high probability key zones. I'm like, all right. So as a reference for today, I'm just going to go ahead and look at the previous day, right? And so the previous day's close and high a day, I'm just going to go ahead and mark that up with a little zone.
Okay.
So that's really it. Those are the two main areas to watch right now. Is going to be that daily fair value gap. It's treated as an area of resistance. That's between 482.56 to 483.42. Then we want to watch this lower zone here between 480.39 to 480.92. That zone off yesterday's close and high a day. That could be a potential area of support. Since we're above it right now, we come back into it. Could be respected as some support for today. And then right below that, you have your weekly hedge pressure level at 479.50. Those are going to be like the three main areas to watch for right now until we get a little bit more intraday movement and we actually start to identify more areas and more zones potentially. But for now, to start the day, those are going to be like those three main areas to really keep on watch here.
Okay. Thank you.
Yeah, no, absolutely. Yeah, some days you come in and you're like, man, I don't really see anything on the daily. It's messy. It's choppy. Like, where are our key zones at? And you're like, I can't really find them. You know that those are probably the days that you're going to sit back on your hands and there's going to be limited opportunity. But then there's going to be days you come in and you just see things clear as day. It's like, oh, that's a key zone. That's a key zone. I like this. This looks good. And you're confident, convicted to trade off those zones during the day. But days like today, it was a little bit more of a challenge to find those zones. There's not as many key zones and significant zones. Today's just a day where you focus a little bit more on just be patient, sit back on your hands and really wait for like the best type of opportunity.
You may have an entry.
On what?
Shop.
We pulling back a little bit? We are. Yeah, so Fib retracement from low of day to high of day to start. Into the daily. Is there any other level to watch? Let's remove the Fib because it's really in the way. We got that lower zone that we talked about this morning. That was the first area that I definitely wanted to look to get in at. But I mean, after we've already broke it, retested it, I wouldn't want to see it come back down to that level personally. Since it already saw that little break, it held and it ripped, I wouldn't want to see it come all the way back down. So I'm going to go with a Fib retracement to gauge where could we pull back to and just really wait for like price development to validate an entry if we start to see like a higher low forming. But yep, we are rolling. Let's see what happens. Let's see if we set up, find a bottom, and then start to form some kind of intraday higher low. And then if we see that, we can definitely look for an opportunity to get long. But right now, we're definitely rolling. Well, I guess today was the short off that daily fair value gap. They're on the cues. We came up to it, tap, tap, tap. Nice rejection, lower high retest, flush. That was a key barrier here. You didn't take the trade, it's okay. A bit of a riskier trade because it's like, where at inside of this fair value gap do I get short? So if you didn't take it, I get it. But now it's like, okay, it ran up to the fair value gap, tap, 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 got rejected, came back up, retested it with an intraday lower high, got rejected. Now we're just looking for the next lower high formation, right? So run up into resistance, rejection. Run on up into resistance, lower high, rejection, right? And we also fell below that previous low as well. So I'm waiting for the next bounce back on up, identify an area of resistance where we can, see another lower high form, and then look to take that lower high short, expecting that we see a little bit more downside here. That's all I'm looking to do right now. Just wait for a little bounce on back up like we saw here. Identify where that lower high is going to develop at, and then look to take it short for some downside.
I just played SPY and hit it for 20%. It's the
Nice.
first trade I've done since I've joined that I found my own levels. I came up with my own strategy and I followed my own plan.
I'm talking about, baby. I love it. I love it. Confident. You had the skill set to do so. You nailed it. 20%. Solid work, man. Congrats on that.
Yeah, thanks.
Yeah, man, absolutely. All the hard work's been paid
Now I'm a
off.
little sad that I'm leaving money on the table because I got out too early, so maybe my plan wasn't quite perfect.
I know we talked about that last week. It's like, yeah, maybe getting out too early. Let's just start building, talk about plans and scale out systems. That's something we talked about last week. Building plans, be able to actually assess our risk based on the chart, not a percentage, right? Really dial that in. And then once we dial that part in, it'll be easier for us to identify like additional profit targets that we can scale out into to, again, just capitalize on those winners when we see follow through in the market. So let's have that conversation sometime, because that's going to be like the next big step to help you start scaling your trading to the goals that you have. But
Yeah,
still,
I'll
20% is
get on it.
20%, brother.
Shopify just round tripped.
Did it do a round trip? Said, not today. We'll see how it sets up down off that zone again. I mean, with already seeing a nice break, hold, and rip, you wouldn't want to see it move that low. So it makes me a little kind of like 50-50. Like, do I really want to get in at that level? But let's see what it does and how it develops. And maybe, just maybe, there is a reason to get long here on Shop.
The Qs, I like that trade. I just want to see it further into that fair
Yeah.
value. It just didn't
Same.
really.
And that's what I wanted to see too. I wanted to see at least the top 50% of the fair value gap. Like when we see pretty wide fair value gaps, I just run a retracement just to gauge where that 50% threshold is. And I'm looking for entries above the 50% level inside of a bigger fair value gap like that. So I agree. I wanted to see it come up a little bit more and then maybe set up like it did. Feel confident to get short at that top end, because then I could put stops right above it. And then I got a lot of downside. Let's run a fib extension from this most recent swing high down to that swing low, back up to the swing high here on the Qs. Do we have any fair value gaps intraday to the downside? We do not, nor do we have any really to the upside. So nothing there. We got this downtrend across these lower highs on the Qs. So go to this high, connect this lower high with the trend line, simply extend it out to the right. You have a downtrend here on the Qs, and then you have this fib extension from that swing high to this swing low. The other thing that you can look at here as well would be this previous low right here. Just as a reference, not saying you're looking for a trade off of it, but you did have this big break to the upside. That's where you pulled back to. You stopped falling. You bounced. Lower high, crack. Could you see a retest off that level for the next leg down? You could, and it's in line with the golden pocket based on that fib extension. They got like two potential reasons, two intraday reasons to look for a short, maybe at like 481.70 on the Qs. That would be a simple crack and retest back into that golden pocket, into that previous low, which could be some resistance. But it's all just based on these intraday levels. It's not like we're seeing this take place at a daily zone where we have some daily confluence. It's all just purely intraday. Looks like the Qs may snap those legs off. See a little bit more upside here. So I want to see a little bit more upside. I mean, that type of formation like that at key support, that leads me to believe that we're going to, what I call, snap the legs of that chair off. Because that looks like one big chair, right? So you got that big drop, you got that lower high, and when all that happens at support and you see that roll, usually you see that big shoot on up, that big impulsive move. I call that snapping the legs of the chair off. Especially when that type of development takes place at a level of support, which we did. So I would expect to see this try and push a little bit higher to the upside. I'm still waiting to see if this downtrend gets hit. That'll be in line maybe with one of these fib levels, but we'll go from there. Right now, I wouldn't want to get short because I can see a bit more to the upside possibly here. Let's see. SPY's also sitting at a light little level of support.
Break them legs.
Snap those legs off, Qs. Snap them off. Yeah, we see this a lot. Where it's like the first thing that you see is like you want to get short. Big dump on down into support. We bounce. You see that lower higher, like, oh, let's play this momentum to the downside, right? But when you see that type of formation taking place at key support and you see that support level hold and you start to see that reaction, 80% of the time you snap the legs off, you get a big shoot to the upside. And that's kind of what you're starting to see here. Snap the legs off. Snap them, baby. Keep snapping them. And we'll go ahead and close that trade out. Riskier trade. I don't put my name behind everything, but hey, there are trades that I will take. So I'll take that for a quick little $300 hairs. Everything's setting up nice today. NVIDIA short was great. QQQ short at the fair value gap was great. Snapping them legs off. That played out pretty nice.
Speaking of pretty nice, I like that trade you took late in the day yesterday. I think it was on the Qs, that short.
Oh, you saw that?
I was watching that. Yeah, I was watching see it play out.
I took that on all 3 of my accounts. I was so confident,
really?
so convicted. I took the same trade across all 3 accounts.
But I just watched your patience, the way it, because it was bouncing around. I was watching just the profit bounce up and down. And then just when you started scaling out, I was like, man, that was a great freaking trade.
And honestly, that whole time, I'm like, I'm not going to do anything until it flushes the low day. That's how convicted I am. That's how confident I am. I'm not going to do anything until we get down the low a day. And then I'm like, that's stupid. Scale out, Josh. Be smart. You're already up $500, $600, $700. You're up $500 on your futures account. It's like, dude, like, you don't know what's going to happen next. Check yourself. Scale out. Even regardless of confidence and conviction and your plan, just be smart, scale out. And I started to scale out, and I'm happy I did because we saw that massive rip towards the end of the day. And yeah, that would have definitely got me at my break even. So I'm happy I took profit and scaled out because I look back and I'm like, you know what? The market did what the market wanted to do. Here's a short on the Qs, guys. Right off that 38.2 extension up against that potential little downtrend here. Worth watching. Market's definitely swinging here today. I like this volatility. I like it. See good shorts, quick drops on off. We see quick long setups. We get some follow through. I like this movement for sure. We just got to identify a crystal clear killer opportunity here. Again, could have been 0.3 off that downtrend. If you guys trade off uptrends and downtrends for the 0.3, I mean, you came up within that 5 to 10 cents of that trend line. That's where you'd be looking to get short on a 0.3. Stops right above the trend line, and then boom, you're already starting to see a couple bucks of profit there.
Didn't get my order typed up quick enough.
I mean, Shop likes that lower level of support. We'll look at some Shopify calls and see what they're looking like now. Stops would be underneath that pullback low, so stops are going to be literally like 30 cents. And you're looking to run this up to 68. All right, let's go 29 days out. Shopify calls, maybe a 67. Oh, they're tightened up a lot. There's still kind of a larger spread. That's on 29 days out. You still got they're not terrible. About 5% on those. Those got about 10% on those. Those are like 30%. We go out 36 days. Spread's still 10% on most of these.
22 days gives you a 3-cent spread.
Yeah, and then I'm going to 22 because I'm like, honestly, this trade, in my expectations, could hit that first target in the next day or two. And then we still have 20 days for the runner. And at this pace, the way it's moving, that's a good amount of time, 22 days out. And yeah, the spread is much better.
It's one of the better contracts for volume and open interest too, because I've looked all over up and down the scale for the different options contracts.
Yeah, I'm looking at, because I always like to keep a pretty tight delta. I don't want to go with a 69 out of the money. I probably want to go with like a 68. Which ones were you looking at?
I was looking at 67, and I'm jumping around between that. 68s have gotten better. It's 141 to 146, so you got a nickel spread on the 719s.
Mm-hmm.
726, you're looking at a 9-cent spread.
On the 60, on the 67s?
Yeah, the 726, 68 calls.
Yep.
That's a better, even 9 cents is reasonable.
What are those priced at?
190 to 199.
About a 68 call for an extra week out compared to 140. Yeah. So you're paying an extra $50 a contract for an extra week. 22 days, at this pace, the way that we already saw it move today, and we get that first target of 68, looking at that daily, realistically, by tomorrow, I think it's realistic we hit that first target. Then we still have, would that be 4 weeks, 20 days to hold a little bit of a runner? I think it's realistic to go the 22 days.
Yeah, I like the 719 67s, 182 to 186 on the price.
I like those too. Yeah. I've been eyeballing those, and then I'm eyeballing the 68s as well.
It's not that much of a cost extra to go an extra week.
It's not, no.
The only thing you run into, we're coming up on the 4th of July, so you lose a day.
True. Very true. And I'm going to lose a few days sooner than what we thought. I think everybody was picking like July for the due date. Dude, it's going to happen any day. She doctor's appointment yesterday, and they're like, we don't expect to see you at the next appointment. And I was like, when's her next appointment? It's Monday. So any day. So everybody's wrong. It'll be a June baby. Most likely. Yeah, they don't expect her to be at her appointment on the 1st of July, so it'll probably happen in the next 2-3 days. There was your short on Rivian. If anybody was paying attention to that, 14.18 rejection. Boom. There's your short on Rivian there. Right off the top into that gap. Target 1207. Yep. Everything we looked at today is set up pretty nice. Rivian, right up to that 14.18. Strong rejection. Nice stuff. Shopify is looking okay. Maybe it sets up off that zone for a long. We'll keep it on watch. But the first little break and hold, nice rip to the upside. We'll see what Shopify is able to do here. NVIDIA played out wonderfully. And then Q's worked out pretty good as well. For a day where I'm like, I don't like anything we see. Market's actually moving pretty decent. Another girl? We don't know. It's a surprise. We never found out this time. I think that's why I'm more eager than anything. I'm eager to figure out if I'm finally having a son. So, fingers crossed, guys. Whew, fingers crossed. Could see a nice little higher low break of this downtrend off weekly hedge on the SPY. So you got above weekly hedge, back below it, back above it. Now you're pulling back into it with some pretty good price action right off weekly hedge pressure as support. And you do still have this wee little downtrend sitting right here as well. So with that being said, we may see a nice little higher low push off of weekly hedge pressure support of 546 and start to break that downtrend. If we start to see that setting up and taking place, that would be a decent little long opportunity that we can capitalize on back up to high a day here. I mean, nice little break and hold above weekly hedge. Looking for a nice little higher low break of that downtrend as well. Stops would be below weekly hedge. And you did see that nice little 50% retracement on that lower shadow before it got bought right back up above weekly hedge and that 38.2. That gives you a third confluence here. But the only thing you got to be mindful of is not only do you need to break that downtrend, you got to get back above that 546.32, because 546.32 is that daily 50% level off that extension. And so we can already see that that's an area of resistance. That's the only downside is resistance overhead, but we get a break of the downtrend and back above that 50%. We could really start to see some buyers move back in, get a nice pop back up to high a day. They're on the SPY. Kind of got the same thing going on with the Qs. Nice little higher low break of that downtrend coming on up. Give me a second. I'm going to step out for like a minute, and I'll be right back with you. Oh boy, we got some profits and profits chat. Let's get it. We got Mr. Logan locking in 485 on NQ, just playing off lower time frame supply and demand. Let's get it, bro. Well done, man. Boom. It's like that. Q's back up a high day. You got SPY pushing back up the high day as well. Nice little higher low push. Break of the downtrend. Seeing some action. Just didn't feel like taking it for some reason. There's just some days you come into the market, you're like, man, I feel good, pretty dialed in. I just don't feel like trading. Today's one of those days I'm like, I just don't feel like trading today. Got one trade. That was good. Well, if the Qs want to fill the entire fair value gap to the upside, I would take a low risk trade. Very, very, very top end of that fair value gap, assuming we have some kind of rejection and reaction. Look for a quick little 3-to-1 scalp. Try and get in at the very absolute top of that fair value gap. See some kind of nice little, reaction that indicates, yep, there are sellers present. And look for a quick scalp to the short side. So entries, would probably give it a shot around 483, 42. Take it back down to the lower end of that daily fair value gap, which is also in line with all that previous resistance. It gives you a nice little 3-to-1 risk reward. We'll see what happens here. If anybody has any questions, let me know, guys. We're just sitting back, waiting and watching for the next best opportunity here. Look at some of these swing trades. Boeing's starting to look good again. It was looking good in that little demand zone we had down there. Yeah, I'm not really seeing too much here. Not really seeing too much. I want to see maybe the Qs come back down into the trend line. Bounce back up to the lower end of that fair value gap, which is right in line with all these previous highs. So if we see the Qs come down into this trend line for a 0.3 and we bounce, I'm going to let it bounce on back up towards around 482.57, 482.60. If we start to see a lower high developing at that area, I would be interested in getting short for a potential lower high, bracket that uptrend on a point number 4, and I would expect that to, give us some downside here on the Qs. So if we set up just like that drawing, and that's exactly what it looks like, and that's exactly how it's setting up, I am looking for a short up around that 482.57, 482.60 region off that potential lower high that could be developing coming on up. There's another thing I see here too. You got that little 1 minute hiccup candle right there. That's also in line with all that previous resistance. We put in that little hiccup candle. That looks pretty nice here. So we got previous resistance. We got the little 1 minute hiccup candle sitting right there. Right, that'd be a 0.3 bounce. That would be a lower high before maybe getting a crack on that 0.4. And if you really zoom out and look at the bigger picture, you start to see possibly a little bit of that head and shoulders formation. Right, could be the left shoulder, could be the head, could be that right shoulder if we start to see that lower high formation at the same area as that first level of resistance that we set in here today, which would be technically your left shoulder. So there's definitely a lot that stands out here on the Qs that suggests we could have a nice trade to the short side. I'd be looking at maybe some like 481 puts. Yeah, 481s. I mean, I definitely think 481.27 is a target, and then back down up against 480.50. So I would go with some 0 DTE 481 puts, expecting that those have potentially go in the money in a pretty quick amount of time. If I can get my words out of my mouth. Fib extension from this swing high down to this swing low, back up to that swing high. And would you look at that? Little golden pocket off that fib extension sits right there at that hiccup candle zone at all that previous resistance, right around that 482.60. So I'm liking the 482.60 being an entry, putting stops over that little candle high right here. So you got about 22 cents of risk. First target would have to be this low here. I mean, first target gives you a 3-to-1. Second target down up against that low, that's a 6-to-1. And then final target back up against that low, that's a 9-to-1. But still, first target being that low right here, that's a 3-to-1. Entries right around 472.60. And putting stops right over that candle high. Right there. About 20 to 25 cents of total risk. And again, entries 482.60 for me. Got 1, 2, 3, 4 reasons to consider taking this trade to the short side here. You gonna roll without? Oh, come on, Qs. Don't do it. Don't roll without me, dude. Oh my goodness. Okay. You gonna roll without me? Fine. I don't want to trade you anyway. mean, technically speaking, this could still be the trend line right there. I mean, I was going to count that as a point because, I mean, it did technically come within 10 cents. But trend lines being so subjective, I mean, if we see it hold right here and start to push on up, I mean, that is still a valid uptrend. And technically speaking, that trade could still possibly play on out. So it's still worth watching here. Looks like that is going to be that 0.3 of the trend line. Now we just want to see a lower high into all that resistance and then come back down into that trend line for a fourth time. And there's definitely a high probability chance that we crack that trend line on point number 4 if we do come off of a lower high. So that would be the next A+ trade that I see possibly setting on up here on the Qs. All right, I'm going to take a stab at shop calls here. Came back down to that zone again. You're seeing an influx in volume. You're seeing a push out of that zone with that pop of volume. I like that type of price action. And then again, seeing volume move in and seeing a nice big push out of that zone with a pretty strong close on that last candle. So I'm going to take a starter position here on Shopify calls. I went ahead and decided to go with the $68 calls for July 19th. It's a little bit closer to that 30 delta that I like to rock with. So, but I do like what we're seeing here, and I'm in, and I have my stops right underneath that zone. So taking this as a day trade opportunity, right? So entry, stop, first target high a day. That could turn into a swing trade, and I'm positioned for that just in case. Somewhat I'm carrying maybe 30 cents of total risk on the trade. To get first target high a day, it's over $1. It's 3-to-1 to first target, and then 68 would be your daily target for the swing trade. Let's see. Q set up for us. Yeah, baby. Give it to me, baby. Too busy over here trading Shopify. Well, Shopify better play out now if I'm going to miss a QQQ trade. I want to see a nice little wick, nice little reaction off all of that resistance, ideally as close to that 482.60 as possible, but got my finger on the trigger just in case. 481 puts, 0 DTEs, because if this does play on out, these lower high cracks of uptrends typically have some follow through, and 481 is a very realistic target, and even getting below 481. Those would go in the money. That could happen fairly quick. Those 0 DTEs would ramp up in premium fairly quick as well. Those would be the ones I would go with. Let's see what this candle does and how this candle reacts. If we get a little bit of a reaction at this 482.50 to 482.60 on this candle here, and we get another little reaction and rejection, I'm going to start getting in, start scaling in. And it's a boom or bust trade. So risk is 20 cents. It is a boom or bust trade. Want to see it hit, a little tap, tap, tap off all of that resistance, and then just start to drop into that trend line and then crack the trend line on 0.4. It starts to push through all of that resistance. The trade's dead immediately, and I start to invalidate it, and I close my position for a small loss. But I'm going to start to scale in. We already get a little bit of that tap, tap, tap. seen a nice little reaction on this final candle here. So I'm going to start a scale in. Let's see if we get some follow through. Maybe I add to my position. I don't know yet. But at least I'm going to start a starter position here, as I'm starting to expect we roll off that lower high. Pretty decent price action. But this is key. We got to crack the trend line. Like, that is key. Like, if we come down to the trend line, we stop, and we start to push back up into that region where my cost basis is, my stops are at break even, right? Because I know I nailed my entry. That's the lower high. We need to crack. We need to flush. We need to dump. If we don't, those weren't my expectations. That's not the trade, and that's not what the trade should do. So if we stop at the trend line and start to bounce immediately, that trade starts to become invalid. When the trade is invalid, I close my positions. So knowing the trade, I know the expectations, and I know the criteria that needs to be met, and I know how it should play on out and what amount of time it should take to play out. If that's not happening, right, the trade's not working the way it should, it's invalid. I close it regardless of what happens next. On to the next one. So right now my stop is at break even. I feel like I nailed the entry to the penny, right? And if we start to bounce off this trend line back up to my entry, that trade's invalid. I'm not going to carry this trade. I'll close the trade. So we had initially, what, 20 cents of risk? My entry was a little bit lower. My entry was right here. My stop is over that prior swing high. I'm risking 8 cents or break even. Because there's my readjusted entry where I actually got in when I was filled at initial risk over that prior high up here. But now I'm seeing the lower high, the drop into the trend line. I know that we should not push above that high or even get close to that high. So now strategically bringing my stop down to where the trade would be invalid if we hit that price. That's 8 cents of risk, 55 cents of reward. You're sitting on a nice little 8-to-1 here. We need a crack, we need to flush, we need a drop. Do not snap back above that trend line, good sir. You do not want to see that push back above the trend line and it regain it. If that happens, close it. First target's hit, scale out.
God, I could not get filled on this.
You didn't get filled?
No. Damn it.
It happens. You already had another really good trade here, though, earlier today.
Yeah, but I like all the money.
I like all the A+ trades because I know the money follows and it looks good sitting in my account. All right, second target is down at that lower shadow here. The 15-to-1 risk reward. Like, stops are break even now, 100%. Like, you're carrying no risk on the trade. All you're doing right now is managing your trade and scaling out when you see fit. When targets are hit, you scale out. You start to see it doing something you weren't expecting, like ripping back to the upside. And you're like, whoa, that's not what it should do. You can scale out and take some profit. I got a smaller position here. I didn't get my full position. So I'm going to try and manage this for a good duration of time until the trade clearly says, okay, it's no longer intact, right? We're no longer going to see some downside. But right now, I mean, it still looks pretty decent. I would like to see one of these candles close below 481.90. I don't want to see it just drop below and wick above, drop below, wick above, but still close above that level. That would indicate we could probably see a little bit more upside and see a bounce. I would want to see the Qs close, a candle closure below 481.90 to feel confident that, hey, we can get to our second PT right down there. You got more profits in profits, chat. QQQ put Scout for oh shit, $900. Let's go, Tom. Jesus.
That was a Kevin moment. I fat fingered for 100 contracts.
Oh shit. Yeah, that's a fat finger, all right. Excuse my language, but holy smokes, man. So you closed that immediately, dude.
Well, that's what I did. I was like, holy crap, what the hell did I do?
Fat fingered 100 contract. Wow. $900, that's a good day. That's what we call one and dones. A mistake working out with us.
Yeah, that's usually not the case, though.
That's usually not the case, but when it happens, I'm like, all right, well, I'm going to take that, and I'm not going to give that back.
Sometimes it's better to be lucky than good, Tom.
Yeah, I mean,
you're not kidding. As soon as I saw that, I'm like, oh, crap, this is going to go against me. I just
immediately you're like, oh, now I got 100 contracts. It's definitely going against me.
I
would have felt so bad if that trade didn't work. Like, man, I'm sorry.
Oh, no. That's my fault. But I sat there. I got the shakes just like you did on your GameStop short.
Yeah. Now what? You got $100 in commissions and fees. 120 actually.
I want to know how that became a Kevin moment. When did I fat finger 100 contracts?
That wasn't you
No.
that hit that?
Tim, that was
That
Tim.
was
Oh,
Tim.
Tim, I apologize. My bad.
Yeah,
wrong
Tim was
person.
trying to buy 20 and he bought 200 by accident.
Oh, sorry, Kevin.
No, there's no shame here. I just, if I did it, I definitely want to remember it.
He's like, I don't remember that, but if I did it, well, shoot. Good trade, though, guys. Good trade.
Yeah, good but stupid, but good for me.
I love the stupid good ones.
Yeah,
That
well,
is 100% your sign to call it a day now, Tom.
Oh, yeah, you're up, what, 1,100 on the day between those two trades? Woof. That's a
Who
day
knows?
right there, buddy.
you know, I'm in the Shopify trade. So I'm managing.
Yeah, I'm down a couple bucks.
Yeah, it's not bad.
No, down a
Right.
couple doll hairs here. And then I didn't do anything on the Qs like a dip S word, but I may look for a another entry to add to this if we stay below this downtrend. Because, I mean, we did close below that 41.90. I know we're pushing back above it, but the fact that we saw some closures below, I like it. And, you know, bounces and downtrends are going to happen. So, yeah, nice little drop. Took only 2 contracts. We're bouncing. Big deal. We hit that downtrend, get rejected. I want to add to this position, expecting that we get a little bit more downside here. I'm going to accidentally fat finger adding to the trade. I'm going to add 10 contracts. Oh, there was 100. Let's make the monies.
I love it.
Good stuff, man.
Nice to know Tom's the new big baller of the group.
Big baller.
We see a big price candle move now. I'll be like, well, Tom must have got in or out.
Hey, will you go to lunch so the market dumps for me?
No, it's too early.
Dang it. I'm rooting for you, Corey. I'm rooting for you. Again, all seriousness, next target, 481.30 was your second target. And then your third target was 480.60. We're just managing the trade, right? You're going to see bounces and downtrends. So it bounced. I'm not panicking. I'm not freaking out. I'm like, I'm not going to close the trade. Trade's still intact. All right, we saw a bounce, okay? We're still in a downtrend. Everything looks good. Just managing the trade, not managing the P&L. And I'll close the trade when we hit targets or when the trade becomes invalid. And whatever the profit is the profit. But I'm going to manage this trade correctly, not manage my P&L, and go from there. Some nice volume moved in on that last candle. Where are we at retracement wise here? From swing low to swing high, sitting right at the 50. Nice little pop in volume. I'll probably take a little bit more, scale out just a little bit more here. I mean, we already hit first PT. We're slightly below that first PT. Actually, still kind of right at it. Let's see if we flush here. If we flush, we're still sitting pretty. We start popping back up at like 481.90. Start scaling out a little bit more. But still got to work the trade, not work the P&L. What am I up? 228? Cool. We'll see what I close the trade out at. But next PT to scale out, 481.30. You're about 40 cents away from that. You had a lot of strong volume move in on that last candle. Sitting right at that 50% retracement from that swing low to that swing high. This is an area that we could definitely pop off of. In bigger picture, still in an overall uptrend. Short-term downtrend, but bigger picture, zoom out. Swing low, swing high, swing low, swing high. Still technically uptrending over the bigger picture, but here's short-term downtrend that we're trying to capitalize on. Yeah, starting to find a little bit of a bottom off that 50% retracement. This might be an area where I start to scale a little bit more here. Like I said, like right around the high 480. Yep, we're going to start scaling out a little bit more. And then just hold a runner at break even, see what happens. Yeah, we break the downtrend and we start to push above 482 18. That prior little swing high right here. That's invalidating my short trade. I close it. And that runner of 4 contracts will probably be right about a break even here. And yep, that's the break even. So all said and done, I got a whopping $100 out of it, but put that in perspective. I only had 10 contracts. I paid 58 cents a contract. So what, $600? I pulled 100 from it. What's that? That's nearly 20%. If you look at it from a percentage return standpoint, hey, I pulled almost 20% on that trade. Now it's just how do I extract more money from the market on these trades? I just take bigger positions. If I would have had 30 contracts, I would have been able to get 300. Still, percentage-wise, still a solid little 20% ROI, quick trade, and I scaled out. Was trying to manage this a little bit more and trying to capitalize on some follow-through, and my runner got clipped. So letting the base hits add up. And then Shopify, still down a couple bucks on that. Down about 60. Yeah, mine are down 50 bucks. Like 5 cents on the premium. Nothing too crazy. I got a Cisco trade as well. I'm down 7 on. I got that Apple swing trade through to next week that I'm down like 369 on. So I still got a couple swing trades that I'm currently down on. But still got some time on those.
I feel like the way Shopify's holding that level though.
Yeah, it's grinding it, which is nice to see that she's just grinding it. But I want to see a nice push and a nice pop off that level. We start to fall below it here, underneath this low at 65.36. I'm going to cut it completely. And if it sets back up, it sets back up and I re-enter the trade. But if we start to curl here and we fall below that zone and that pullback low right there, it's like, again, 65.35, that's where I'm going to cut it.
Yeah, it's done. I like to see this thing close above 66 today.
For sure. I want to see those legs get snapped off. So I've had 2 trades today. 3. We had shop, but day trades, right? Had one on QQQ this morning, long. We had that one short on QQQ. Do those trades make sense? The reasons I took the trades, the confluences, right? How I built my plans, why I entered the way that I entered and how I entered, right? Do those trades make sense to you guys? This is one of the best ways to learn. See it all happen in real time, analyze it, building plans, executing, managing trades. Best way to learn. But you guys are going to have questions. So ask those questions, get the help, and let's help you bridge that gap, guys. riskier trade, but I'm going to get long on the Qs here in a second if we see a little bit of a pop at like 481.75. If this is the start of a crack of a trend line, but we see that it's a false crack, like a shakeout in a sense. I kind of like what we have here on the Qs. So it could be setting up, fingers on the trigger. If it does set up, I'm going to take it, I'm going to manage it. I'll explain it. If it doesn't set up, they'll explain it. But I mean, looking at it, still going to set up, fingers on the trigger, but we'll see how it plays out. But biggest thing is we're still in an overall uptrend, right? High, higher low, higher high, pulling back, a little bit of a higher low formation. We were sitting right there at the golden pocket based on that fib. We were also coming down and bouncing off 0.3 of that uptrend. So daily uptrends, right? Seeing that pullback in the 0.3 of this uptrend that's in line with these previous lows and the golden pocket of that fib. And what we were starting to notice into all of this support is what we were doing was starting to curl a little bit into all of that support. We could have seen a nice big push, a nice big pop to the upside, but we did just see a crack of that trend line. So that trade was invalid. There's no reason to take it in the first place, unless we see that this was a false crack of the trend line. And we see that a lot where it's like, okay, lower high crack on 0.4. We got the drop, and then sometimes it'll shoot right back above that trend line pretty much instantaneously, regain it with a higher low, and then push from there. So if this was just a shakeout below that trend line, and if we would have snapped back above it, regained it with a higher low, back above all of that support and that fib retracement level, we're still in a bigger picture uptrend. And I was considering to take this long, expecting to see a little bit more upside. But we cracked the trend line. We're seeing some follow through. And so that trade idea was invalidated the second I even considered taking the trade in the first place. So nothing there. Scotty V, good job today, brother man. Nice little 750 on the day. Good stuff, man. Well played. You guys see anything that looking good? Do you got your eyes on anything? Anything that we can cover? Get me involved here, guys. I know I say this a lot. Get me involved, get me involved. Engage, engage. I just want to keep stressing that. Make sure that you're getting exactly what you need from these sessions. But not really seeing too much right now that stands out. Oh, Shopify, you look like duty. This is the second time on Shop where it's setting up, looking pretty good. I took it, and then I ended up stopping out for a small little paper cut. It's like the second attempt on Shopify. Yeah, I don't like it getting back below that level here. If she flips red on the day, it's a definite stop out for me. I'll take my little paper cut and go from there. Because the way we could see it play out is the attempted push today, doesn't push, comes back down, still gives you that higher low, and then sets up coming into next week. I still like it. I still think it looks really bullish. I see a lot of upside. Today was the day that we started to see that first initial move on up, and we're trying to capitalize on it. If it doesn't set up today, and we do take that little small stop out, which it looks like it's going to happen, I'm going to close it. I don't like it because it leads me to believe like we could see one more short-term little pullback, one more little higher low into that 20 EMA before we do see that possible squeeze and that possible push or to the upside. And that's something that could be setting up coming into next week. Today just doesn't look to be the day. Whew, those 481s went insane. Those are up 100% right now. Yeah, I'd like to see the Qs get below this zone that we're holding as support, get below it, get below that daily 50% level, come up and retest it as resistance. I would really start to like that setup and the way we're looking for a possible short-term swing trade. Just got to be mindful that if there is an opportunity to get short for a swing trade, you will be holding through some key data tomorrow. So that's just something to consider and something to be very, very mindful of. But we'll see what the Qs do. If we do start cracking below that 480.39, we come up and back test it as intraday resistance. I definitely like what that's starting to set up like on the daily, and I would be very inclined to start getting short for a short-term swing. And that's going to look good. We pushed on up into that fair value gap with a strong rejection. And if we start to see a potential close back below that 480.39, I mean, that short opportunity is just A+, in my opinion. Where's Shop at? Did Shop come on down below that blue line? It's sitting right at it. So I will probably be seeing a little bit of a stop out. Let's see.
Hey Josh, I have a question with the fib retracement and extensions.
Okay.
So I was watching the video yesterday about fib retracement and extension, just to, have more information on how to use it and all of that. So you mentioned that it actually doesn't matter which one you use because they both can measure the same thing. So do they actually have like a specific moment that you want to use one or the other one?
Yes, absolutely. 100%. The way I teach you to use fibs, the way I was taught to use fibs by a really phenomenal trader. He was an ex-hedge fund manager with an institution. So he taught me how to use fibs. I use them that way. One thing I will say is you'll see traders using them differently. but that's okay, right? Still valid. It's their edge, but I'm going to teach you the way that I want you to start using them in the beginning. So there is a certain way. So I use fib retracements and uptrends. So we can see here that there's this pretty clear uptrend, right?
Mm-hmm.
So I'm going to use fibs in uptrends, like a fib retracement in an uptrend. So if I see this swing low, for example, and I see that move and that swing high, and I'm trying to gauge where could we pull back to before seeing the next leg up in this uptrend that we're in, I'm going to use a fib retracement from swing low up to the swing high. Okay?
Right.
In downtrends, when we're downtrending, I like to use Fibonacci extensions. Okay? So if I'm looking to get short, basically, and we're starting to see a downtrend, or we're in a downtrend, I prefer to use fib extensions, and I'll show you how we use those. I just got to find an opportunity and then, you know, where we were in a bit of a downtrend. And so here's one from yesterday where we can clearly see we're in this uptrend, correct?
Mm-hmm.
Right? Building higher highs, higher lows, higher highs, higher lows. And then what did we see take place? We saw a massive drop to the downside,
Mm-hmm.
right? So I'm starting to think that we could be going from uptrend to potential downtrend now, since we saw that massive drop to the downside and we put in a substantial lower low. I'm thinking, hey, we could see a lower high and I can get short in the middle of this downtrend. So if I notice, hey, we're starting to see a downtrend or we're in a defined downtrend, I want to use fib extensions. So I would go grab my fib extension tool. I would go find the swing high before the big drop. So in this case, this would be the swing high.
Okay.
I click it there. I drag it all the way down to the swing low. I click it there, but then I have to drag it back up and click it for a third time at that swing high again. So this is how I use fib extensions, is when I'm looking for a possible lower high to get short. I prefer using the fib extensions in downtrends or areas where I'm trying to find where that lower high could be, where I could be looking to get short utilizing those fib extensions. Okay?
Okay.
But again, with an uptrend, I want to use a retracement. So if I think I'm going to get long on a higher low, I want to use a retracement. So if I think, hey, we just saw this massive impulse move to the upside, we saw a very big push on up, I think we could see it pull back, create a higher low, and say move higher. If those are my expectations, if that's what I'm seeing, I want to use a fib retracement from swing low up to that swing high to get an idea of where could we retrace to and pull back to before seeing more upside.
Okay.
Does that help?
Yes.
Awesome. And that's how I was taught to use them. So downtrends, right? Or we see the start of a downtrend, or we're trying to get short on a lower high, we're going to be using those fib extensions. If we see that we're in an uptrend, or we think we're going to start an uptrend and we're trying to find where that higher low is going to be so we can capitalize on the move higher, we're going to use fib retracements on those.
Okay.
Correct.
Yeah, I didn't want to keep going on the video because it was starting to getting on how to identify the prices, and I was like, hold on, because I still have this question, so I
Yep.
didn't want to move on into the video until I clarify that part.
Yeah, and so that's 100%, right? It's like going through the video, you have a lot of questions, you're taking notes, and then you're to the point where it's like, well, I have all these questions, there's still some time left in the video. Like, I want to stop here, get that follow-up, and then pick up where I left off. And that's when you can use that note-taking tool within the platform, which is really nice. If you guys don't know about the note-taking tool, I would really use it. Example, if you're watching a video and you get halfway through it, and you're like, okay, I have a lot of questions, I need to follow up before I proceed. Just pause the video, click this note-taking button here at the top, and then you can say, come back and watch later. Left off at, what's the timestamp? 12:45. So it's like, all right, come back and rewatch this later. You left off at 12:45, and then you can click this little link button right here and then hit add note. So when you go to your dashboard page, you're going to see all of the notes that you've taken. So here, come back later And watch this. You left off at 12:45. You can click that link. It's going to take you right back to that video. Click play, go right to that 12:45 marker, and that's exactly where you left off, just to really make it seamless for you guys.
Oh, okay.
A lot of little things that make, worlds of difference, but 100%. Because yeah, that we do dive a lot into even more like, okay, how do we identify profit targets with fibs? How do we use fib extensions to map out all-time high resistance levels? There's a lot of ways we can use them, but basic understanding is, what type of market do we use them in? We talked about that yesterday. We use them in trending markets, not ranging markets, number one. Number two, what kind of trend are we in? If we're in an uptrend, fib retracements. If we're in a downtrend, fib extensions. And that gives
would
you
you
just
consider
enough to start
using-
applying that in the market. Yeah.
So would you consider using a fib retracement in QQQ? Earlier today, what was that around? Oh, it was almost starting.
So from like right here to up here.
I was saying okay, so after, for you, it was at around 10, because I have a different time.
Oh, you're good.
It was around there.
Around
So,
10
oh,
o'clock.
that's the second time. No, that's the second time. Before.
So like right
that
here
area.
to like right here.
Yeah. Mm-hmm.
Yeah, for sure. And so I would say, yep. So from this swing low to this swing high, I would use a fib retracement to see where could we pull back, see a
And
higher
then
low form before seeing
up
the next
again.
leg up. So if I think and I see potential for the stock to continue to move higher, I want to run a fib retracement from swing low to swing high to see where could we pull back to, find support based on that fib retracement before seeing this next leg to the upside, if those are my expectations. And so those were my expectations at that time, is like, absolutely, we could see a nice higher low pullback and then see the next leg up. That was one of our game plans that we had discussed. So I would grab a fib retracement from that swing low up to that swing high, right? Because this is the low before the move started up to the high. Okay, now you could have taken it down to this low if you wanted to, from this swing low to that swing high, and that's still going to be a valid fib. I personally like to find the point before the move started. Where did the move really start? It really started here, and then it ended here. So I would prefer to take those 2 points. Here, before the move started, up to where the move ended. Where could we pull back to before finding support, and then seeing that next leg up if we're going to see that next leg on up. So 100%, you could have used a short-term fib like that. So when we're looking at individual swing lows, swing highs, swing lows, swing high, those are what I just call a short-term fib, right? Because we're looking at these individual swing lows, individual swing highs, right? But then we can zoom out and look at the overall day, right? And say, where's our main swing low? Where's our main swing high? And then I can run a fib from those main points. That's going to be a bigger picture fib, right? Looking at more significant points, the main swing low of the day to the main swing high of the day. That's another way that we can use those fib retracements as well. But then we can zoom in and look at these individual swing lows to swing high and still use fibs off those points to gauge where could those short-term pullbacks be before we see a short-term move to the upside, for example.
Okay. Yeah, now I notice that it's 1 hour. I'm 1 hour before you, so I can tell you timestamps from there.
Yeah, you're doing really good. Fibs are pretty challenging to learn, in my opinion. They really are, because there's so many different ways to use them and the different types of markets and like what points do we use. There's like so many different variations when it comes to fibs and fib extensions. And so it's looked at as a bit, challenging, but once you understand it and you can apply it, it actually becomes really simple. Like most things, right? Like day one, I'm sure support resistance, analyzing these levels on the daily, I'm sure that was a bit of a challenge the very first time you tried to do it. Now here you are doing that all week. I'm sure you feel a lot better with it. It's starting to click and make a little bit more sense. Same thing with the fibs. Yep. And like right now, as an example, like, is there a fib that we can utilize here? Like, would there be 2 points, 2 clear defined points where we can use a type of fib? What would you say?
Um,
And if you don't know, that's okay. And I'll explain what I see.
could it be an uptrend, like a retracement from, well, for you, 1051 for you, all the way, no, I don't.
Okay, and that's fine. And so, yeah, and the first thing I would say is, you know, it's a bit challenging to see is like, where would I start running fibs? Like here is pretty clear and pretty clean movement, right?
Yes.
Like it was clean, it was clear. There was a clear uptrend. There were clear points to connect fibs off of. Okay, and then we compare to
I
what
did
we see
see a
through
big
here. Is this as
downtrend.
clean? Is this as clear as this type of movement here? Or is this a little bit more
Yeah.
choppier?
Yes.
A little bit choppier. So it's definitely going to be more of a challenge to draw those fibs correctly when it's a little bit congested and choppy. But here, super clear, obvious. We can find those points, draw those fibs. So this one's a bit of a challenge. But I look at this, I'm like, okay, you know, we are seeing, you know, the stock overall downtrending here. We are now starting to see lower lows, lower highs, lower lows, lower highs. So what I could do is say, all right, here's a swing high, here's a swing low, right? So from this swing high to this swing low, we have been downtrending. So I know I would want to use a fib extension. To do what? To see if we were to bounce on back up, where could we bounce back up to before stopping and then seeing more downside? So now that I've analyzed the market and I kind of see where we're at and I've identified 2 points, this swing high, this swing low. Since those 2 points, are we uptrending or downtrending? We're downtrending. Now I know what kind of fib to utilize, a fib extension. I can go grab that extension, mark up that swing high, bring it down to that swing low, click it, drag it back up to that swing high, click it. And now I'm going to be utilizing this fib as, you know, potential areas of resistance. Where could we see the Qs go back up to before seeing a possible lower high and seeing the next leg down? We're in a downtrend. Is this overall downtrend going to continue? So I'm going to use that fib extension to see where could that lower high be, right, before we see this downtrend overall
For
continue.
81, for 81.77 around there.
Yeah, so that's the 50% level. Okay, so yep, 48177. That's the 50% level. But our job is to identify other reasons as well. So like, okay, cool. I have these fib levels right here. These are the 2 most popular fib extension levels between the 50% and the 38.2. That's the sweet spot. When we see confluences and we see opportunity lining up with a fib extension between the 50% and the 38.2, that's like the sweet spot for the fib,
Okay.
right? But it's not the only one that could be respected. Like we could see the Qs go all the way up to the 236 before seeing it come on down. We could see the Qs come up to the 78.6 like we have, and then see the next leg down. It could hit any one of these levels, right? Before seeing the next leg down. It could hit all of these levels and not even respect it, period. So we need to find other reasons that line up with the fib. But based on the fib, the sweet spot on a fib extension is right between the 50 and the 38.2. So when you have confluences and other levels and reasons lining up with that fib's sweet spot, right, that really adds a lot of validation to a trade.
Is that,
But now
is
the
that
goal,
when I start adding like the VWAP?
exactly.
You
You start pulling out the tools from the tool belt. 100%. So it's like, okay, do we have any kind of uptrends or downtrends? Well, I see that we can connect these lower highs here, right, and have a downtrend line off these lower highs. So that's something I can do. I can turn my VWAP on and say, all right, where's my VWAP? My VWAP's up here at 481.53. So it's like, okay, I have a downtrend. I have the VWAP. I have these fib extension levels. Do I see anything else? I'm doing all the analysis I can do. So I'll go to a 5-minute time frame. So, all right, do we have anything else? We do. What do we have? Well, we have this 5-minute fair value gap. I can see that. And to make fair value gaps easier, you can just add a fair value gap indicator, and it's going to show you all the fair value gaps that you have. But we can see that we have in between this candle low down to that candle high, there's a space in between those 2 points. There's a big red candle right there, but the candle previous the low and the candle after the high, they're spacing. Those are fair value gaps. So that's something else we notice. I'm like, all right, we got a 5-minute fair value gap. We've got this downtrend, right? We got that VWAP, and we have that fib extension. We've just pulled out all of the tools from the tool belt, right? And put them on our charts. We've done all of our analysis. And when that's done, we ask ourselves, where's the best area to get in, right? Do we think we should get short? Do we think we should get long? And ask ourselves, why? I would say we would get short. Why? Because we're still in a downtrend, and we don't really see anything that suggests we're going to start an uptrend. So if we're in a downtrend, and I see that we're still in a downtrend, I want to continue to trade with that downtrend because the trend is your friend. So I'm looking for a short opportunity. Okay, where? Probably up against the trend line, because the trend line lines up with the VWAP, lines up with the 61.8 retracement, lines up with the midpoint of that fair value gap. So I have confluence. I got a fair value gap. It's treated as resistance. We have the VWAP. We're coming up into it from the underneath side. Most likely going to be resistance. There's 2 reasons. We got this downtrend here. This is going to be downtrend resistance. That's 3 reasons. And then we have this 61.8 fib extension. And that could be a level of resistance as well. So now that I see that I have these 4 confluences, I have to get an idea of where do all 4 of these confluences line up pretty much at the same price. It would be somewhere right around this region here, right? So somewhere between 481.45 up to like 481.52 would be the optimal entry point, right? Because that's where you have the most amount of confluences. So if I put my entry point right here, it's up against the 61.8, right at the VWAP. It's right at the downtrend, and it's inside of that 5-minute fair value gap. So I already know where the optimal entry is going to be for me on this trade, right around 481.46, because that's where I have 4 confluences lining up at nearly the same exact price, right? Do you see that? And so now I can gauge where would I like to get in. I wouldn't take this trade, just so you know. I don't like it. We're just kind of too choppy and too congested down here at this point in time. But this would be the process to follow, right? And we just do that. This is the process we follow all day, every day, until we see a trade come to us, set up exactly the way we want, and we can take advantage of that opportunity. But this is all we're doing until we see a trade come to us and give us a reason to take that trade.
Okay.
And then let's say we break this trend line. Well, that trend line becomes invalid at that point in time. We would simply just go ahead and remove it. Let's say we push through that fair value gap, right? Well, at that point in time, that fair value gap would be counted as invalid. We would just remove it at that point in time. So as certain tools and indicators and like your forms of TA, as soon as some of those things start to become invalid, I would just remove them from my chart altogether. And that's why you see throughout the day, I'm consistently removing fib extensions. I'm consistently removing, uptrends and downtrends, deleting it, getting back down to the basics, just looking at key zones of support resistance. And then I continue my analysis from there until I see, hey, we have a good trade coming up. We got 4 reasons to take it at 481.50. So, hey, I want to get short at 481.50 because we got 3 reasons to take it there, 4 reasons to take it there. And I see that opportunity. Once I see it, I build a plan, I get prepared, and I just wait for the trade to give me the opportunity to really just get involved. And then just simply rinse and repeat that process.
Thank you.
Yeah, no, absolutely. Just one step at a time. Key zones of support resistance, number 1. Number 2, wait for the market to get to one of those zones. Number 3, pull out the tools from the tool belt. Identify all your confluences across multiple time frames. Do all of that TA, all of that due diligence. Just keep on doing it until you find an area in price where you're like, hey, I want to get short here. I want to get long here because I got all the reasons to do so. I feel really good, super confident, feeling pretty convicted. Then just build a plan and wait. We follow those steps. We put in some reps with that. It becomes second nature. It becomes easy for us to come in and follow that process and find the best trades and then eventually take the best trades. But the more repetition, the more you put in, the easier all of this becomes. And it really does become second nature. It just starts to click and you just start to really do this on autopilot. So we're getting there one day at a time. Well, Shopify had a nice big push on back up. And so the other thing too that I like to do, and this will come with more screen time and experience, is like, do you see anything that stands out to you at first glance? Like it's like the first thought that crosses my mind when I look at a stock. When I look at the SPY on the 1 minute time frame, at first glance, do I see anything that stands out to me? I do not. So I usually just go on to the next one, right? I don't really spend too much time analyzing and trying to find reasons if I don't see anything that looks good at first glance. Like at first glance, what do I see? Slowing down, starting to get pretty tight, pretty congested, starting to get pretty choppy. I don't like a congested, tight, choppy market. First glance, I don't really see anything. What I see is, So on to the next one. The Qs. Do I really see anything at first glance? I mean, yeah. I mean, I see this downtrend that we have, but we're consolidating into this downtrend. And I know that when we consolidate into a trend line, it's just not a valid point to get a trade off of. So, I mean, yeah, that's the only thing I see at first glance, but I see the same thing. Just starting to get pretty tight, congested, and choppy. First glance, I'm not a fan. All right, on to the next top stock on my watch list. NVIDIA. Do I see anything right now that really stands out to me? I mean, maybe a little bit of a downtrend here. Not really. It's already starting to break it and chop around it. Other than that, anything else really standing out to me at first glance? Not really. On to the next stock on the watch list. And I just do that until something really starts to look good. Like, oh, Boeing. Wow, we're having a pretty strong day to the upside. Okay, cool. Do I see anything here? Do I see a reason to maybe take a trade at a certain level? It stands out to me at first glance. It's clean. It's moving. It's not tight, congested, choppy. There's movement here. And when there's movement, there's opportunity to take trades and, make money. And so I'm a big, again, it comes down to like, does something stand out to me at first glance? If I don't see anything, it's like there's probably nothing there in the first place. I do not really spend too much time trying to find a reason if that's the case. And that's pretty much how today is. The SPY, just nothing really here. The Qs, nothing right now at this point in time. And across the board with NVIDIA, with, some of these other plays we've been looking at, nothing looks phenomenal right now. But at the start of the day, yeah, there's a lot setting up at first glance. It was looking good. It was clean. We were moving. There was follow through. There's opportunity to take trades when we notice opportunity really stand out to us. But then we get into these periods where it's like, yeah, this is just not looking all that great. These are the times you sit back on your hands and you literally do nothing. So when we have these moments in the market, which happens pretty often, where opportunity's not there, market's slowing down, we've already had our best trades of the day. Really, it's opening the mics. Let's get engaged. Let's have a good conversation about something. Let's talk about something maybe you're struggling with, right? This is the time for you guys to get what you need from these sessions. And you hear that all the time. And if we don't have any engagement, there's no questions, or there's nothing really happening, then we start cutting back around 11:30. Start enjoying the rest of our day. Well, with all that being said, I'm going to take a step out for like 1 to 2 minutes. Maybe that'll get you your memory jogging a little bit. Maybe you got something top of mind that we can discuss. A couple minutes, we'll be back. We'll go from there, guys. All right, all right. All right, I'm gonna start picking on some of you guys. Don, how you doing today, boss?
Doing good, guy.
Love it, man.
Been listening
Anything
to
top of your mind? You know, what step you on, man? Where are you at right now? Is there anything I can help you with right now in the moment?
Right now I'm just trying to get TradingView installed on my Mac.
Okay.
I got it installed, but it's all the white background. I need to get the dark the way I'm trying to set it up like I see your screen.
Oh, it's white right now. Weird. Usually by default it comes in a dark mode. Yeah, so when you got your charts loaded up, there's like a little chart settings icon at the top right-hand corner of the platform. And so if you click on your chart settings, that's where we can go through and start making all of the adjustments to our charts. So we can go through and adjust the canvas. So that's gonna be like the background, the grid lines. You know, we got quite
The
a
three
few.
dots. Yep.
Yep.
Thank
So,
you.
yeah, man, it'll be under your canvas and then chart basic styles, background. Mine's in
Awesome.
a gradient, but I'm pretty sure both of my colors are the same. And then I pretty much gray out the grid lines. I'm not a huge fan of seeing the grid lines. I want a pure naked chart. So I set my grid lines in transparent so you can't see them. That's pretty much it. I can do this. I can take a screenshot of my settings. And then at least you have an idea of what my settings look like.
I just did. Yeah. I
Oh, you
took a
already did. You're
screenshot.
on top of it, man. Look at you. Kenyona. Hopefully I'm pronouncing that correctly. If not, you'll yell at me. I'll get it right. How are you doing today?
I'm good. And almost, I'll take it.
How you pronounce it?
Kenyana.
Kenyana. There we go. Kenyana. I'm just going to act like there's an A after the Y so I say it correctly.
Okay, that's
All
fine.
right. Well, how are you doing today?
I'm great. How are you?
I'm doing phenomenal. Can never complain. How are things going over the last couple of weeks?
We are still trying to navigate. I'm still going through the lessons, so I'm not done with all of the lessons yet. So I'm listening. I'm in. I'm just trying to get a better understanding your style of trading versus what I've been doing in the past, and I just need to separate the two.
Gotcha. I mean, I'm more than happy to break down your style of trading and my style and find the happy median in between to see if there's like synergy between those. We do that a lot with clients here. So I mean, if you want, if that's what you think one of the biggest bottlenecks is, it's kind of like, okay, how does Josh trade? What's his methodology compared to mine? Is there like a sweet spot between the two? And if that's kind of where you're at, we can definitely jam on that, and we can definitely try and help, bridge the gap.
Okay.
So give me an idea. The best your ability, the best way that you can articulate it. Like, what is your, previous approach to trading? Like, what were you taught in the past?
My previous approach was more of swing trades versus the day trades. I see that you trade off the 1 minute a lot. I typically trade off the 5 minute.
Okay.
So just trying to really look at the shorter moves that you're taking for the intraday trades versus mine. When I'm looking at my setups, I'm looking at it, may get in and get out today, but if I don't get out today, I still have time on it for it to make the move that I'm anticipated for it to make.
Makes perfect sense. Gotcha.
Okay.
And so you primarily swing trading options, or are you swing trading shares?
Options.
Gotcha. So you're going to really like my methodology and like my approach. It's because my approach works for any type of trader in any type of market. Swing traders, position day traders, traditional day traders, scalpers, doesn't matter. It works for everybody, because what's the first step in my process of analysis is I start on the daily. And I do all of my daily analysis. And my real goal is, does something on the daily stand out? Do I see a daily setup? Do I see a daily opportunity? And if the answer is yes, right, most of the time, it's because there's a good daily setup that indicates there could be some follow through over a couple of days or a couple of weeks. So that opportunity is swing tradable. But at the same time, as a day trader, I can day trade that swing trade opportunity. And like you said, if I get into that day trade and it works out well and it looks good on the daily, still suggesting there's going to be follow through for a swing trade, hey, that day trade at times will be turned into a swing trade, because that's how I'm approaching that trade at that point in time. But if I see that daily setup and I'm like, hey, there's an opportunity to, say, day trade that daily setup, but I don't see what I want to see towards the end of the day, or maybe it's not really setting up correctly for the swing, I can close that position out and capitalize on the day trade profit. So it really works good for a lot of traders, regardless of the market that you're in, regardless of your trading style. My process, my methodology and approach to trading and finding opportunity, it all starts with the daily and those higher time frame setups that are indeed swing tradable. So it could be pretty simple, I would say, to like kind of bridge that gap. So when it comes down to your swing trades, how do you swing trade? Are you looking for like certain formations, certain setups, like bull flags, bear flags, cup and handles? Or are you trading more, like supply demand, support resistance? Give me an idea of, what you're looking for on a daily to see if there's a swing trade opportunity.
So some of the stuff that I'm looking for are like hammers, bullish engulfing candles. Those are my
So
my
like
primary
candlestick formations?
two.
Okay.
Yes. Those are like the primary two that I'm looking for when I'm looking to take my trades. Then when I'm looking, and like I said, they're swing trades. So I'm looking at the daily candles, and I'm looking at the weekly candles.
Okay. Gotcha. So let me ask you this. So mainly candlestick recognition, shooting stars, hammer dojis, the three white soldiers, any kind of like candlestick, formation, be able to recognize those formations. Is that like a standalone approach? And when I say standalone approach, I mean, if you see a certain, candlestick formation, like a doji candle, like, would you just be willing to take that trade because you see that? Or are there other things that would have to be present on that trade as well?
There are other things that has to be present. Like I look at the RSI a little bit, but not so much the
Okay.
RSI. I am looking at that. I do put my fibs on there. So I'm looking at the OTE to find like if there's an optimal trading entry for that trade.
Based on
So I
fibs?
do look at that.
Okay.
Yes.
Awesome.
Mhm.
So you got fibs
And then I'm
down.
also looking at the 200. Like, are we sitting above the 200? Are we below the 200? So I look at that as a reference as well. I use that a lot, the 200.
The 200 SMA, 100%. Very,
Yes.
very popular. Gotcha. So are you analyzing any like key levels of support resistance or institutional supply demand?
I was not. Now, going through your training, I have started to do that.
Beautiful. Because I would say definitely let's incorporate that. And that's some of the first few lessons that we discuss is it all comes down to our zones. Like we're just zoning on the daily, finding daily zones of key support, key resistance, institutional zones of supply demand first, then we build everything else on top of it. So then it's like, okay, let's run our fibs. Let's look at the 200 SMA. Do I see any kind of like doji candlestick formations occurring at said key support level? For example, that's also in line with that OTE zone. You know what I mean? So if we start there, just incorporate that, get good at finding these zones of support resistance and supply demand, and then you just follow up with everything else you already do. I think that one tweak, that one adjustment will really help you be able to identify better opportunity in the market for those swing trades. And you already have a really good process that, you'll get in the market on a 5-minute time frame for that swing trade. And if it pans out that day, you'll take your profit. If it's not looking good for some reason, you take your profit. But if everything's shaping up the way you expected, that's a swing trade. And that's how you're kind of approaching it in the first place.
Okay.
Without knowing a whole lot. That's the tip of the iceberg. This is the first time we've really had an opportunity to get connected, which we're going to do this a lot more on those one-on-one sessions and get a lot more, take a deeper dive, a much, much deeper dive. But this is just a quick high-level overview of kind of what are you doing and just some quick recommendations until you get to the point of I want to have those one-on-ones with Josh.
Okay.
I would just say great focus. Supply demand. We actually have a really good training in the lessons library. So I would actually direct you to that. Stir put that together. Not sure if you've watched it, but it's in the training center. And it's going to be in the quick hit playlist right here.
Okay. Okay.
Yep. And the lesson is trading with the banks. So one of our moderators and soon to be coaches, Stir, took, probably 45 minutes to an hour out of his day to basically educate everybody on how to identify daily, weekly, monthly institutional zones of supply and demand, right? High probability areas that we can see the market move to. I think that's going to be great for you to learn that and apply that. That's going to help you out a lot. And then on top of that, some of the lessons you've already gone through with how I identify like key zones of support resistance, not supply demand, but just key zones of support resistance. I believe if you master those two things, you start applying those two things on top of everything else you already do, as far as fib retracements, extensions on the daily, EMAs, SMAs, candlestick formations, and you incorporate all of that together. I think that alone should help you identify more opportunity and probably better opportunity, and also allow you to, start eliminating some of these stocks you think are good opportunities if we're not, sitting at a key zone, for example. I think it'll really help you identify the best of the best, and a lot of the trades that you start to take will probably play out a little bit better than maybe what they have before by applying those two things.
Okay. I do have a question.
Yeah.
So when you're doing the pre-market rundown and you're going through like the key zones on like the SPY and the Qs, and then you picking your 2 to 3 individual stocks that you're going to look at, what are you looking at a glance on the individual stocks when you say, oh, that nothing looks interesting to me, and then you move on to the next? Like you're going down a list, you're like, nothing looks. What are you looking at when something sticks out to you?
And this is the thing that comes with a lot of experience and a lot of screen time. The more you're in the market, the more you see opportunity, and the more you take trades, the more you see certain things play out and certain things not play out, you start to be able to recognize certain things very quickly. So when I say something doesn't stand out to me at first glance, is because maybe if I look at the daily and I just see really choppy, tight, congested price action, like that just doesn't really stand out to me. I'm looking for opportunity for today. Opportunity that I can trade today to make money. And if I see a really tight, congested, choppy daily, weekly, monthly chart, and I'm just like, that doesn't look good, right? Nothing really stands out to me there at first glance. But if I come across something like Rivian, for example, right? I'm scanning through my watch list this morning and I come across RIVN. At first glance, does something stand out to me? Yes. What? This big old daily gap. And I love trading gaps. So at first glance, I notice something on Rivian that stands out to me. And when that happens, I will continue to do my analysis on the daily, the weekly, the monthly, fib retracements, extensions, this and that. I'll do all the analysis. Then ask myself, do I think something can happen today or over the next few days on this stock based on the analysis that I've just done? The answer is yes. It's one of my top stocks for today, keeping on high watch. The answer is no. I'll add it to a back burner watch list, something to just still keep on watch over the next few days to see if it would eventually set up. But it all starts with, at first glance on the daily, does something stand out to me? Rivian, something did. It was that daily gap. So then I just simply continue my analysis, and I call it the top-bottom approach. So higher time frame all the way down to your lower time frames. And through all of that analysis and all of that due diligence that I'm doing, like number one, I'm getting prepared. I'm identifying everything I need to identify. And if a lot really starts to stand out to me even after that, it really just boosts my confidence and conviction. And I think that's the biggest thing, is we get to the point where we're really convicted and really confident in what we see in front of us. And we believe there can be an opportunity to take advantage of today. Number one stock to watch, right? But if I come across a stock like, I don't know, let's just say I'm going through my watch list and I'm like, I come across Starbucks, for example. And this is what I see on Starbucks at first glance. Does anything really stand out to me? I mean, the only thing that stands out to me is this gap here, right? But we're all the way down here at like 79. The gap's way up here at like 83.50. So it's pretty far off. And for the longest period, we've just been really consolidated, been really tight and congested, and we're just kind of chopping to the downside. I don't like that. I don't see any clear movement. I see tight, congested movement. I don't like that, right? But at first glance, I see this gap. Like, okay, we could eventually fill the gap. Are we anywhere close to this gap today? We're not. Do I realistically think we're going to get anywhere close to that gap today? Probably not. Is there an upcoming opportunity on Starbucks? Maybe, for a gap fill. But is it a top stock for today? Probably not. Would I backburner something like Starbucks? I would absolutely backburner something like Starbucks, but still keep it on watch. Periodically look at it to see if we ever do get near that daily gap. Because if so, we could see a daily gap fill opportunity, and that's something we can trade. So then that's how I would find something like Starbucks that, at first glance, this doesn't really stand out to me. That doesn't look all that good. I don't see any opportunity to be trading in this mess, personally. But maybe in the next week or two, we could have an opportunity to trade inside of this big daily gap, as an example. And then another example of something that just looks absolutely terrible would maybe be like Airbnb, right? Airbnb at first glance, just, I mean, maybe that's not a good example because there's this gap overhead. And we could say, hey, the gap looks good. But Disney, for example, right? I look at Disney at first glance and I'm like, I don't really see a whole lot that stands out to me. It's just one of those things that I can, at first glance I see with experience, like I just don't see like opportunity, right? Just looking at the past, just this week alone, we haven't really moved that much this week, right? We're stuck below that 20 EMA, right? And we're just getting tight. We're kind of congested. The price action hasn't been the best. It just, at first glance, I'm like, do I really think Disney's going to do anything today? I don't think so, just based on what I see on the daily and kind of what we've done over the past week and a half. So at first glance, I don't really see anything that's standing out that suggests, hey, if this happens today, we can see a big move up or a big move down. I don't really see that at first glance. So I'm like, Disney, probably not today. On to the next one. Home Depot. We're gapping gaps, right? We see gaps. We got gaps all over the place. It kind of looks messy. It looks a little inconsistent. It's up and then it's down. It's gapping and then it's gapping. It just seems pretty random all over the place right now. There's no consistency. There's nothing that stands out. Home Depot, I'm like, for today, probably not one of the best opportunities for today. And then again, on to the next one. Wayfair, right? Do I see anything that stands out to me at first glance on Wayfair? Not really. Massive drop down, and we got this slow, tight, congested just period of consolidation to the downside over the past 2 weeks. It's not moving, right? It's just slowly falling to the downside. Wayfair at first glance, nothing really stands out to me. And that's what I'm doing. INTC, anything that really stands out? No, on to the next one, on to the next one, on to the next one, right? And eventually out of these 80 stocks that I look at, 1 or 2 of those will stand out. And that's how I got Rivian today. Because at first glance, I'm like, okay, over the last 4 days, we've really been moving. Right? We saw this stock go from $10 all the way up to $16.41. This thing is volatile. There is volume. It's moving. When a stock is moving and a stock is, moving on an increase in volume and there's volatility, that means there's opportunity. And when there's opportunity, we can capitalize on that opportunity to make a profit. So I like Rivian at first glance. Through this entire region here, every day I would look at it, I'm like, there's nothing here, there's nothing here, there's nothing here, there's nothing here. Now I think there could be something here. We have volume, there's volatility, the thing is moving. And then at first glance, I see, hey, there's a daily gap. Okay, great. What could we maybe see today? I don't know, maybe if we got inside of this daily gap and stayed inside of this daily gap, I could look to take it short for a gap fill, right? See if it comes on down to fill this gap. So I'm like, okay, I see opportunity. The thing's been moving. There's been an increase in volume. There's volatility. I think there could be some opportunity today. And I see that we're inside of a daily gap and daily gaps are tradable. So Rivian, top of the watch list. I want to focus on this one for today because I see that daily opportunity presenting itself. And this is something that could turn into a potential swing trade, right? If I get in at the top end of the gap and we don't fill the gap today, could it fill it tomorrow? Sure, it could. So could this be something that I hold into tomorrow or maybe early next week if the trade is still intact as a possible short-term swing trade? 100%. Right? If we fill the gap all at once today, it's a day trade. I'm taking my profit. If it's something that still looks intact by the end of the day, could I continue to hold some of that position to tomorrow, right? To see if we do come and fill the gap tomorrow for a swing? Absolutely. So I see potential swing trade opportunity, but also an opportunity that I can capitalize on as a day trader. So that's kind of, my methodology when I'm like scanning my watch list in the morning. Does something stand out to me at first glance? Yes or no? If something really stands out to me, I'll analyze it. I'll see if there really is opportunity and I'll watch it throughout the day. But if I come across something and I'm like, man, it's just choppy, it's congested, it's not really moving, just nothing really stands out to me, it's noise, in my opinion. Is it going to move today? Every stock moves. But is it something that I really think should get all of my focus? No, it's more noise than anything. Hopefully that makes sense.
It makes a lot of sense. So yes, that helps.
Awesome. And really that just allows me to be picky, right? I'm very picky with what I trade.
Very picky.
I'm very picky with how things need to set up. And that's not a bad thing. It's a great thing to be picky. I don't trade that much, but when I do trade, most of the time they're profitable. And when I take those profitable trades, they add up to nice sizable days, but I'm so picky, and it pays to be very picky in the market.
That helps.
Awesome.
I
Yeah, I
can
mean,
figure
you
that
have some
out.
experience coming into this, which is awesome. And so it's going to be really easy to kind of just help you fine tune your trading, maybe simplify your approach if it's not super simple, help you simplify it, really dial it in, and really build a system around it at the end of the day. And then have something that you can implement and replicate on a daily basis to make money, you know, and hit those goals that you have.
Okay.
The only other question I have for you is, how long have you been in the market?
I started trading in 2018.
Okay, so quite some time.
But it kind of came to a halt in 2019 due to some medical reasons. So I finally traded a little bit off and on in 2020, 21. I kind of got back into it full circle in 2022.
Okay. And I would assume you're here for one of two reasons, or maybe both. Reason one is consistently profitable, just not there yet. Number two is maybe we realize the emotions get in the way. We don't really have the discipline that we need to have to be traders. It's like a mindset thing. Is it one of those, or is it both of those?
Both of those, and include patience.
Patience. It pays to be patient.
Yes.
Okay. So yeah, jam on those lessons, get some of those done. Some of these things you already know. If you already know those things, you don't got to go through and watch them. Really, that's to help refresh yourself, kind of get an understanding of the most important, the basics that we're going to be discussing, and kind of like help you build that foundation. But for you, honestly, even if you don't go through the rest of those videos, I think you're already ready to start booking some one-on-ones with me. You're an intermediate trader. You've got experience. You understand the market, the time frames. You have an idea of what your system is, right? You've got a lot of experience. We just need to simplify that, dial that in, refine it, and just make sure it's effective. Something that we can take, implement on a daily basis, knowing that, hey, over time, we're making money consistently. And then the system that you're confident with to scale that to make more money if you want to scale it and make more money in the market, right? That's focus point number one, is let's dial that in. And that should be really simple because you have a really good approach, really good methodology. We just got to tweak it a little bit, but that's going to be super simple. Number one. Number two, really put most of our focus on the mindset related things in the program. If we realize we lack patience and sometimes we give into our emotions and we don't really have the discipline that we want, right? And we recognize that, I would say 80% of your focus needs to be around the mindset related items in the program. The other 20%, the technicals. That's the easy part. We're just going to refine and simplify and improve. That's going to take a couple weeks at most. That's the easy part. 80% of your focus, I would put into the mindset related items. So getting into the mindset mastery course, into the inner world course, going through and creating a morning routine to help out with the discipline and the accountability aspect and the checking in and doing your evening check-ins with the trading performance score, like those types of things. Without you really knowing, is going to help you become more mindful, help you become more aware. And when you're more mindful and when you're more aware, you're able to become more disciplined. You're able to be more patient. You're able to recognize when those emotions are coming to the surface. You can recognize it. Oh, I'm starting to get emotional. That's a no-no. Let me walk away for a second. Really just the mindfulness and the awareness that you gain is going to help you become more patient, more disciplined, regulate the emotions. So I would put probably 80% of my focus on that. Go ahead and get a one-on-one call booked with me whenever you want, and we'll just talk technicals, simplify your trading, build a system, and start to implement that maybe as early as next week.
Okay. Sounds like a plan.
Awesome. We'll get you up and running, profitable in no time.
Okay.
Mr. Trucker Ed, what's up, buddy?
None. I got maybe the last 5 minutes of, I guess, the gaps.
Yeah, you heard the gap.
Volume.
Mm-hmm.
Yeah, that's all I kept hearing. So I know I put out one yesterday on Slack, and He answered it, but my brain hasn't slept much in the last few days, so I wasn't quite understanding. But I think you just explained it. It was on ticker PHG.
PHG.
Yes, sir.
Okay.
Or something
PHG.
Mm-hmm.
Okay, PHG.
Let me make sure.
Yeah, because so it's this one. Okay, it's a $25 stock.
Yes, sir.
Oof. Yeah, it's
Yeah, he said he had a headache looking at it.
I have a headache too. I mean, the thing trades over 1 million shares of volume a day, but look at the lack of liquidity. Like when you see candle movement like this, where the candles are not tight together, and you see a lot of spacing between candle, this looks like I'm looking at an OTC stock. That's what this reminds me of. I'm looking at some kind of like OTC stock over the counter that has literally no volume or no liquidity. I would even have to assume that the spreads on this thing are just large by standard. I'm going to go look at the level 2. I would assume that the spreads are tight. There's just, dude, it seems like there's no liquidity. The thing's gapping all the time. It just seems messy, in my opinion. So when I look at PHE at first glance, what stands out to me, right? Messiness. That's what I take, is it's messy. Looks like there's no liquidity. It looks like the thing barely trades any volume. It looks messy. I don't like that. I wouldn't even consider trading it because I don't expect there to be any kind of consistent movement or consistent follow through. It looks messy to me at first glance. If I get into a trade, the trade's probably going to be a messy, challenging trade to deal with, you know? So yeah, I don't really see anything here on something like that.
Okay.
I mean,
like I
even
said,
if we saw an A+ opportunity with 5 reasons, just because how messy and scattered this is, I would still say just these aren't the types of stocks that we should really be looking at. I just think this is more noise than anything, personally.
No, yeah.
And
I mean, I don't know. I was just looking at it as because I know when I was in the medical field, once again, the only reason why I looked at ResMed is because that's what we used to put out, that product. And I said, hey,
and you
let
can
me
see
look into that
RMD is
one.
tighter. It doesn't look like as choppy as messy. It's tighter. You don't see all these weird little days and weird gaps all over the place. It's a tighter, cleaner moving stock, RMD. I like RMD. That's fine. And you had a good trade on it too. But on PHG, when you look at these side by side, wait, hold on.
Yeah.
Was I on the right one? Is it a $16 stock or is it a $20 stock? Which one are you looking at?
No, it was the 25. It was 25.
Oh, because there's another PHG, and it's this one here. It's Philips New York Register. No, are you looking at the healthcare group?
Yeah, it was.
Oh, I was looking at the wrong one. Yeah, I'm looking at the wrong one. I'm looking at New York Registry Shares. That's one I was looking at, 2563. You're looking at PHG.
That's the one that I was looking at, 2563.
Oh, okay. Because PHG, the healthcare group, that ticker PHG, that's a $16 stock.
Okay, no, the other one was right now it's at 2563, or saying.
Yeah, but if you're looking at PHG, the healthcare stock, this one's $16.20. If you're looking at PHG, Philips MV New York Registry Shares, that PHG, right? That's the $25 stock.
Maybe I looked at the wrong. I mean,
could be. Yeah, I just wanted to show you that this PHG. It's not the healthcare one I thought you mentioned.
Yeah, no, I had looked at the wrong one because I was looking for the one that when they had bad news when COVID happened and they were suing that company for people getting cancer with all the ventilators and machines and everything. And I was like, what? And they were using those ventilators for patients. And I said, let me look how it's doing now.
Gotcha.
So and they were our competitors as well. It was 2 machines we used, and that's why I said, let me look at that one. But I guess I got the wrong ticker at the end.
Oh, you're good. I just wanted to clarify we were looking at the right one, which it was not the right company, but it was the right chart you were looking at. So that's the good thing. Yeah, those types of stocks, that type of daily movement where you see it's all scattered and you got gaps all over the place. It honestly looks like a low liquidity, OTC stock. They're messy, they're choppy. And if we already notice messiness and choppiness and we see a great trade and we get in, how do you think the trade's going to play out? Probably messy and choppy. It's not going to be a fun time. From experience, those are noise to me. And I'm just like, yep, not even entertained. I don't care how much upside there could be and how much money I can make. Not even worth it.
No, yeah, you were, like I said, I caught the last 5-10 minutes whenever you were speaking to him.
Yeah, gap,
I
gap,
don't
gap,
even know.
chop, chop, chop. Yep.
And I was like, I think he's explaining what I saw in my chart right now. And I looked, I said, no, you're not, but let me just see if mine is kind of similar to what you're talking about. But yeah, okay.
Cool, man.
I'll look at it later on tonight then.
You see, team though, team went hoorah to the upside, man. I don't think it's going to come back down and give you an entry at this point.
Oh,
I mean,
man.
It could set up, but I mean, what we were looking at, what, 2 days ago? Yeah, that's not going to happen. It's going to be completely new analysis, completely new reasoning for the trade if we see an opportunity. But yeah, over the next day or two, I mean, she's strong, man. Still pushing to the upside pretty well.
I guess whenever I just see them, I'm just gonna jump in because
No, don't do that. That's a no.
like I'm seeing them. It's just
It's kind of like me and Shop. I saw Shop down here like last week, and I was like, I want to jump in, but then I had to check myself. I'm like, what are the reasons, man? What are the reasons? Yeah, it looks good, it looks bullish, but just because it looks good and looks bullish doesn't mean I have a high probability setup. What are my reasons? And as I'm finding my reasons, it starts to move, and I'm like, where am I going to get this trade? I may miss it. But then it did set up today. But it happens to the best of us. I mean, I missed my NVIDIA trade today. And Tesla yesterday. I missed the Tesla trade. Tesla ripped big, man. I was looking to get long at that 188 level. We just never came back and retested it. And that thing just absolutely exploded yesterday to the upside.
So Shopify did get in?
Yeah, it almost hit my stop. My finger was literally on the trigger, man. I was looking at today's low a day, and I was like, yo, if this thing flips red, I'm getting out. And so literally, I was finger on the trigger on the daily. I saw the daily candle flip red. I was like, all right, here we go. Getting ready to click the button, then it flipped green. I'm like, all right, hold on. Let me go into my 1 minute. Let me see what we're doing. We wicked below it. We pushed. I was like, all right, well, I mean, it's today's low a day, and if we hold it, there could be some upside. Let me give it like 5 cents under that level. And then it just started to push on up from there. It's like, whew, man, dude, literally clipped. Almost got clipped to the penny.
You were expecting that last night, weren't you? You said you wanted it to come short a little bit below a certain area.
Long. Yeah, I was like, if Shop can get a break and hold above that 65.43 to 65.53 zone of support, that's an area where I want to be getting long. That daily looks very bullish to me on Shopify. But just because it looks super bullish doesn't mean I'm just going to jump in. There's still got to be a solid reason to do so. And so my reason today was breaking and holding that 65.43 to 65.53 zone, and then seeing a push from there. And so far, took some heat on the trade, literally got right to the area where I was pulling the trigger to stop, hung on by a thread, and trying to push back up a little bit. So we're looking pretty good.
Good. No, yeah, as for RMD, I know when I brought it up, I said, okay, it went up, then it came down. And then yesterday, it cracked it again, cracked the resistance. Now, it was resistance, it cracked it, and then it came back down to that zone to hold it as support. I'm like, okay, let's see what happens throughout the rest of the day. And just pretty much kept holding it right there. I said, okay, it was like maybe 1:40, 2 o'clock.
Mm-hmm.
And I said, you know what? I'm gonna take this one on my paper account, and I'm gonna put that $30 like you said, one contract, $30 downside.
Yeah.
Well, you said $1.
Yeah, if you're going with a 30 delta, you
Yeah.
take one contract, you can give it up to $1 because that would be you're right around that $30 of risk. But since you're swing trading, you have to factor in your theta as well. So make sure you're factoring in the theta. So if you took that trade and it was a 30 delta, you could risk $1 to not exceed that $30 loss. But if you're going to hold this from to 1 day to the next, you have to look at the theta. If the theta is a 10, right, just to hold this into the next day, you're going to have an additional $10 of risk on the trade. So you just got to factor that in on your swing trades.
Oh yeah, in the morning it was telling me supposedly my PA now was -15. I'm like, huh? Okay.
With the
So
gap
I guess-
up, just that time decay, the theta decay. So we got to look at that too. If we're like, yep, I'm going to take this trade here, I'm going to hold it till tomorrow. Not only should we look at the delta to calculate our risk on the trade, we need to incorporate the theta. So if we would have done that, maybe we're like, you know what? I can't let it go $1. I can let it go 75 cents. right?
Okay.
So if it goes 75 cents, I lose $20 based on the delta. Then the other $10 of risk comes from the theta, which still puts me at $30 on your swing trades. Just always look at that.
Okay.
Because again, if
Yeah.
you take that trade here, right? And the next day it opens at the same level. If you had shares, you're break even, right? On that contract, you're going to be down just because of that time decay. So always try and factor that into the best of your ability.
Okay. We'll do. I mean, I'm still gonna hold that trade, and
It still looks good.
like I said, I had a target all the way to 198, 199 anyway. So
I think, if you can break 193.73, realistically, up to 200 makes a lot of sense. But you got to get through that 173, or I'm sorry, that 193.73 first.
okay. So on that one, I guess that's my move. I'll say move the stop loss to break even at that moment.
If I was in RMD right now, getting inside the gap, holding the lower end, and I got long, my stops are below the gap. We gapped up today, we pushed, we have a little bit of a pullback. 100%. If we come all the way back down to the lower end of that gap where I got long, I don't like the trade if I was in it. Seeing that we already gapped up and pushed today, I would run stops at break even if it were me, but that's just me and how I manage trades. Some traders will have a plan, right? They'll have an entry, they'll have a target, they'll have a stop, and they won't do anything until one of those two levels are hit. Sometimes that works for people. Doesn't work for me. I like to manage my trades in real time. So in real time, I ask myself, if this were to come all the way back down to the lower end of the gap where I got in, would I really like the trade at that time? Would I get long at that time? Absolutely not. So why would I want to be in my trade if I wouldn't enter the trade at that time? And so from there, I can justify, hey, bring in stops to break even because I'm not going to like what this looks like if it does come back down to my cost basis, if it does come back down to that level where I entered. Because I wouldn't look for a long there. I would think this thing's going to keep going lower. So if I wouldn't get long at that level and I'm in it, I'm okay with getting out at break even on that trade.
Jen, that's what's happened to me. On the, what'd you call it? The intraday trades that, since I don't have time to manage it, on the ones that I just been going into, I put a stop loss profit and I let it. And yeah, it goes up a little bit. And then, I could have taken profit if I was managing it and just sitting there. But then it comes down, and instead of me having the time to move my stop loss to break even, then it cuts me out at those negatives. But I like you said on the swing trades, I think I have more time where, like today in the morning, I saw it was
do.
way up there, and I'm like, okay, you know what? I think I should move my stop loss at break even now. And if it comes down, okay, I just
Yeah,
broke
you got
even
some
and
time
that's
to
it.
manage that because it's a longer duration trade. 100%. You don't need
Yeah.
to manage it every minute, every 5 minutes like you're day trading it. You already have the intentions to hold it for maybe a few days. So you can manage it every hour, right? Every hour, take a peek at it, see what it's doing, and make adjustments if needed. If nothing, all right, cool, whatever. Come back in another hour. All right, where are we at now? If I see something that stands out to me, do I need to readjust my stop? Should I maybe take some profits? You definitely have that flexibility to do that with this type of trade over the course of, maybe 2-3 days.
Yeah, no, I saw it in the morning, and like I said, I think it was first 15 minutes, and it was already, I was at 90% profit on that trade
Yeah.
with one contract. I think it was $210, and I said, oh, okay.
So,
I said,
oof.
but it was a paper account.
Oof, I
I said,
gotta take that on
okay.
my real. Yeah, you keep doing this in the paper account and you find consistency with this. Like, yeah, you're gonna implement this in a live account in no time. You
Yeah.
get about 20 of these trades in, like legit serious trades that you would take on a live account, do it on a paper account, get them logged. Let's look at the data. And if the data suggests this is a repeatable system, you can repeat this consistently, then we'll start incorporating it with real money. But the first step is even identifying, is that a repeatable process? Because if we have 20, 30 trades, for example, and we see that you have a 20% win rate and your average risk reward is 1-to-1, and you were to do that again, would you be profitable? No, it's not repeatable. But if we look at the initial set of data and we see, you have a 70% win rate, average risk reward is a 3-to-1, you have a R multiple of 2, That data suggests that if you did that again for 30 more trades, you would have similar results. That's a repeatable system. So that's why it's crucial in the beginning to come in, take trades on a paper account, right? Legitimately, log those trades thoroughly, and then look at the data, because the data will tell us, is this a repeatable system or not? If it is, you already know like you're going to repeat in a live account and you'll be profitable. If not, we need to readjust a few things with your system, see what's, causing us to have, say so many red trades, and just kind of tweak it, refine it, go from there until we see the data suggests that it's repeatable. So you get me 20 trades, man, just like this. 20 trades. We can review that. We can see what the data looks like. And then who knows, maybe it's time to go into that live account.
Okay, got it.
And that really applies for everybody that's just starting off, right? I mean, if you're brand new, you're not logging trades because you're still learning how to take the trade in the first place. You're not ready for that point. If you're already in the market trading, you should be, logging those trades 100%. That'll give us some baseline data. And if we have some baseline data, we can start to tweak it, make adjustments to it sooner than later. So while we're collecting data, though, I want to stress this, while we're collecting the data, we do that in a paper account. We don't do that with real money. We do that in a paper account because there will be mistakes that are made. Maybe the data is not great. Maybe our system is not really dialed in. Why lose that money, real? Like, why not just go through that process on a Dibble account until the data suggests it is a repeatable process? Then you can incorporate that with real money and actually make real money. So that's another thing too, is get into a paper account during that first initial phase of collecting some of that data. So Shopify, my stop's going to break even on that, just so you guys are fully aware. Right? If we roll on over back down to that zone where I was getting in, I would hate the trade. I would not like it. I would not have any confidence. Stops are break even on Shop. On CSCO, I got a swing trade on Cisco as well for a little bit of a gap fill bounce off the 20 EMA, off that 38.2 retracement. So came down, closed the gap, hit that 38.2, hit that 20 EMA. Starting to see a nice little pop. So I got a little bit of a swing trade here on CSCO. Stops are going to be under today's low of day, so I'm risking maybe like 20 cents. First target's going to be that 47.86 level, and then I'm going to start targeting up towards around that 200 SMA. That's up around the $49 level now. So got a little short-term swing trade there on Cisco. We got the trade on Shopify still open with the stop set at break even. And then I have a Apple trade that I may close today. That'll put me down like 50% on that trade. But I'll have to see what Apple does by the end of today to see if I even want to still hold this into next week. That's really all I got going on. Cisco swing trade, Shop day trade that could turn into a swing trade, and then the Apple swing from yesterday. And between those three positions, I'm right at break even, down a couple bucks. Nice. Shopify calls got you a nice little 242 in profit. Love it. I know how to pronounce your name correctly now. Kenyana. Boom. Put an A there, not an O, and I can pronounce it correctly. Good job. Congratulations.
Thank you. I've heard worse, but I'll take whatever I get on the pronunciation of my name.
I've heard worse too, and my name's not all that hard. It's Josh Howerton. People say Hoverton. I'm like, where did you get the V from? Hoverton? And they're like, how do I say your last name? I'm like, it's pretty simple. Howerton. So I've heard pretty worse too. Or do you go by Josh or Joshua? I don't know of any Joshuas that actually go by Joshua, but that could just be me. I think we all shorten our names up to Josh. But good job on the Shopify. Took some heat there. Wasn't looking all that great, but the trade did its thing. Worked out pretty nice. Congrats on that. It was a good little trade there. Not the best one we've ever seen, but good enough to get involved with it. Yeah, other than that, I don't really see too much. Just going to manage the Shopify trade that I'm still in, manage Cisco, manage Apple. I would have to say Apple's probably going to end up being a loser. Unless we get back below 211.50 today, then I feel good to hold it into tomorrow. But if we're closing above that 211.50, I'm just gonna bite the bullet, take my loss, and move on from that. But it's been a good day, guys. Couple good trades. Got a little QQQ short for a couple buckarooskies. Got a couple winners on the table right now they're going to manage. And a nice little 350 on that QQQ long this morning when I traded in Q futures. So it's a good day. It's a great day. And I expect even better opportunity for tomorrow because we got some we got PCE data being released. And that's the type of data that market can absolutely react to and see some nice volatility, guys. So keep up the awesome work. Trade smart, trade safe. And I will catch you guys back here bright and early tomorrow morning, 7 a.m. And I will stay here, Tom, and we'll go in a breakout room. So let's end it with a big old alpha day trading. I think my kid's asleep, so it's going to be a mild yeehaw with a big old 3, 2, 1, yee! Woo! If I just turn up my gain and I do that and I whisper it, I'm sure it still sounds really loud for you guys. So I'll do that moving forward. But have a good one, guys. Stay blessed. Enjoy the rest of your day. And I'll catch you guys back here tomorrow. Mr. Tom.
Yes, sir.
What's up, man? You want to do this behind closed doors?
Yeah, let's do that. Makes it
All right.
easier.
Yeah, let me